exposure above 50 crores. Last time it was, I am correct, was above 25 crores. Exposure above 50 crores, both fund-based and non-fund-based facility from our bank. Last year, if I am correct, it is from the banking system. So this year, as far as the ECAI rating of our bank is concerned, exposure above 50 crores, both fund-based and non-fund-based facilities from our bank to be ECAI rated. The only one thing which you can exclude for the exposure purposes, which are fully secured by our bank deposit. So if the ECAI rating is not done, what is the additional interest or commission the party has to pay to the bank? So that is, if not, additionally, I told you fund-based and non-fund-based. For fund-based, interest is there. For non-fund-based, commission. So if ECAI rating is not done, additional interest or commission, irrespective of the exposure, to be charged as under. So last time it was up to 100 crores, it was above 100 crores. All those things have been removed now. So irrespective of the exposure, what is the additional interest to be charged or additional commission to be charged for a non-fund-based facility when ECAI rating is not done? So for fund-based facilities, additional interest of 0.5% per annum to be charged. For non-fund-based facilities, additional commission of 0.10% per annum to be charged. So executive committee, that is executive director CAC, is the authority to waive ECAI rating. 1 minute, this is not okay. Even in cases where ECAI rating is waived by specific authorities, additional interest as above to be collected unless specifically permitted by the ECAI rating waiving authority. Okay, the additional interest or commission, it has to be specifically permitted. This waiver, that is whatever waiver we are telling, is valid only till next review or next renewal only. Okay, so which are all the, sorry, 1 more minute. Okay, now accounts whether any exemption can be given for ECAI rating by somebody other than EDCAC. Accounts fully secured by state and central government guarantee, circular CAC and above authorities can waive ECAI rating for accounts up to the delegated powers. Okay, this additional interest or commission of 0.5%, no, which we discussed, or 0.10%, need not be charged for non-obtention of ECAI rating in case of accounts fully secured by state or central government guarantee. Circulated CAC and above authorities can permit. So that is, in that case, additional interest need not be charged. In all other cases, EDCAC and above authorities can waive. In such cases, the additional interest or additional commission to be charged until otherwise it is specifically permitted by the competent authority. And this waiver permission given is available till next renewal only. Okay, so which are all the external credit assessment institutions accepted by the bank for domestic rating? So Credit Analysis and Research Limited, CARE, CRISIL Rating, the second one, India Ratings, third one, ICRA 4, that is Acute Ratings, that is the fifth one, Informix is the sixth one. Okay, then there was a change with regard to the seventh one is another that is Domestic Credit Rating Agency, Brickwork Ratings India Private Limited. For bank loans not exceeding 250 crores can be accepted by ECAI rating with effect from 10/7/2024. Before 10/7/2024, we cannot accept ECAI rating from Brickwork Rating. So in the year 2024, there was a question. Now, what has happened from 10/7/2024? Brickwork Ratings ECAI rating can be accepted, but the exposure should not be more than 250 crores. However, from this HO Circular 481/2025 this year, this restriction has been removed. That means from Brickwork Rating also, like any other 6 domestic rating agencies which we saw in the previous slide, we can take external credit rating also from Brickwork Rating irrespective of the exposure. Then international rating agencies, same HO Circular 223, Fitch Ratings Limited, Moody's Investors Service Limited, then Standard and Poor Rating Agencies. Okay, this is the international rating agency. Now, the next question is, that is, we saw last time the risk rating, either external rating or internal rating, is a continuous process. It is not only before sanctioning the loan, subsequently every year, based on the audited balance sheet, the risk rating to be done. Why risk rating to be done? Whether the risk grade of the borrower is either downgraded or upgraded, we will find out. Accordingly, any additional interest to be charged also to be charged. Okay, that is the main purpose of that is given in the key fact statement to the borrowers. Now, immediately now, whenever there is external rating is done in an account, in that account some rating underwent a change. What is the what we are supposed to do? Whether when the rating is upgraded, what we are supposed to do? When the rating is downgraded, what we are supposed to do? This is given in credit risk management policy 215/2025. Immediately on receipt of the external rating or internal rating based on the audited annual accounts of the borrower, the account shall be reviewed, either internal rating or external rating. In cases of deterioration in the risk rating grade, the pricing, including concession, shall be reviewed to examine the need for continuation or withdrawing of the concession if any permitted. So we have to do a review. However, till that is the review process is undertaken, till the sanctioning authority gives you what to be done in that account, so some additional interest over and above the contracted rate to be levied to those accounts whenever there is a downgradation of the risk grade, either in the internal rating or external rating. When both internal and external rating is available, we will go by external rating. When only internal rating is available, we will go by the internal rating. So whenever there is a downgradation of the internal risk rating of the borrower, a review of the exercise of that account to be taken care. Till such time the review has taken to be that is being done. So what is the any additional interest to be charged to the borrowers? Yes, this has come in the last year 2024. Now it is continuing also. Yes. So this question was not asked last time. So because it was come in the fag end, so there is a possibility of asking the question this year. So whenever there is a downgradation, till a review and compromise the decision is taken about the account, we have to go in for additional interest on that borrower account, either downgradation of the external rating or downgradation of the internal rating. Downgradation of the risk rating external, additional interest to be charged. So the risk rating has been that is given by the external credit assessment institution like AAA, then AA, A, B, B, etc., etc. So when there is a one notch downgradation, that is from AAA to AA or from AA to A, like that, one notch, we call it as one notch downgradation, the additional interest to be charged to the borrower's account till the review takes place. Till the review takes place, keep it in mind, it is 0.50% in all the downgradation by one notches. So that is from AA, it goes to, AAA, it goes to AA one notch. Suppose if it goes to downgradation by more than one notches up to grade C, that is AAA to A, AAA to triple B, AAA to B, AAA to B, BB or C. When it goes by more than one notches, the additional interest to be charged to the borrower's account is 1%. Suppose from risk that is one notch and more than one notch other than D. So D is the default risk grade. When it goes from AAA to D, the additional interest to be charged is 1.50. In all the cases, if you see, when by downgradation by one notch, it is 0.50%. Downgradation by more than one notch other than D grade, it is 1%. Downgradation to straight away the D grade, additional interest to be charged to the borrower's account till next review takes place is 1.50. In these cases, if the account becomes unrated, so due to some reason, what is unrating, we will see in the next slide. If the account has not done, risk rating has not been done, the additional interest to be charged is 1% to the borrower's account. So by one notch downgradation, by more than one notch downgradation, directly going to D grade. So if there is earlier it was graded, now it is risk rating is not done. In all those cases, additional interest of 1% to be charged in all those accounts. Now, so when we call it as a risk rating not done, the customers having ECAI rating, so internal rating it has to be done, no other go. Customers having ECAI rating withdrawn, suspended, expired, or without bank's name and exposure details in respective press releases released by the rating agencies are to be rated as unrated exposure. Suppose if they ask the question, so which is an unrated exposure? Customers having ECAI rating withdrawn, suspended, so expired, or without bank's name and exposure details in the respective press releases given by the credit assessment institution, they have to be treated as unrated exposure. In cases where the external rating agency has classified the account as issuer not cooperating, in such cases, additional rate of interest shall be applicable as per the revised external rating published by the rating agency. Suppose in the rating agency press release, they may give issuer not cooperating. If they give issuer is not cooperating, they will give a risk grade to that account. So the downgradation of the risk grade we have to see. Accordingly, we have to charge 0.50 or 1% or 1.5%. Here it is. This is called unrated. If it is unrated, straight away we can charge 1% additional interest. This charging of additional interest is till the next review or whatever final decision is taken on that account. Suppose this is with regard to internal risk rating. So when I told you whether external rating is there not or not, internal rating is a must in the case of all these accounts every year based on the audited balance sheet. So when the internal rating has come down by one notch, so what is that CNR1, CNR2 that we will see. So CNR1 is the minimal risk one, CNR2 that is internal risk rating. You know, we have 4 or 5 models in the internal risk rating. We go by the portfolio model, exposure up to 2 crores. Then small value model, exposure above 2 lakhs up to 20 lakhs is a small value model. When the exposure is above 20 lakhs up to 2 crores, it is called the manual value model. And when the exposure is above 2 crores, we got Canara internal risk rating model. Under that up to 5 crores, etc. Various models we are having. So the risk rating, whichever model we are doing, when the risk rating is given as CNR1, CNR2 like that, so this is the expansion for that. That means we should know CNR8 means what? Which they may give the question, which is the odd man out? CNR7, they give low risk 3 like that. So we should know CNR1 to CNRD, what is the expansion for the risk grade. Now you see, whenever there is a downgradation of the risk rating by one notch, that AAA to AA. Here it is CNR1 to CNR2. So whenever there is a downgradation by one notch, the additional interest to be charged is 0.50%. By more than one notches other than CNRD, we will charge 1%. If account goes to CNRD, we will charge 1.50%. So that's what we have seen. Here you see there is no question of not rating. So there we saw in the external risk rating, if the account is not rated, 1% additional interest. I told you in the internal risk rating, it is a must because audited balance sheet we have to take and we have to do the risk rating. So whenever there is a downgradation in the internal rating by one notch, 0.5%. By more than one notch, 1%. And if it goes to CNRD, it is 1.50. Okay, this is the explanation for the risk grade. So then, as I told you, if both internal ratings and external ratings are available, additional interest, etc., to be charged based on the external rating. If external rating is not available, additional interest to be based on the internal risk rating of the borrower. Suppose we saw by downgradation by one notch, 0.50, downgradation by more than one notch, 1%, and downgradation to D grade is 1.50. Suppose if downgradation straight away instead of one notch to 2 notches, 1% rate of interest we are going to charge. Any other thing to be asked the borrower, he has to bring in those cases. Yes, if downgradation is by 2 notches, besides charging the additional interest, what we have seen in the earlier slides, we should ask the borrower to bring 25% additional collateral in the form of immovable properties or any other approved securities to be obtained within 6 months of downgradation. So 6 months time is there. Till such time, we will charge the additional interest, what we have seen in the previous slide. So we will ask the borrower to bring 25% additional collateral in whatever form it is given here. The additional interest shown in the table to be charged till the additional collateral is obtained. So, okay, additional collateral is obtained. Suppose if the additional collateral is not obtained within 6 months, additional additional interest of 1% over and above the additional interest shown in the table to be charged. So 6 months time is given, 25% additional collateral. If he does not bring the additional collateral within 6 months, we have to start charging an additional interest of 1% over and above the additional interest which you already seen in the previous slides. In all the cases, the concerned sanctioning authority has the discretion to waive the additional interest or reduce the additional interest. That is a discretion of the sanctioning authority. Okay, sir. So whether any valuation to be done when there is a down, so we saw down ECAI rating, that is, and then where the ECAI rating to be done. If ECAI rating is not done, what is the additional interest or additional commission to be charged to those accounts? This is a change in this year in this credit policy or credit risk management policy. And then state and central government guarantee covered accounts, circulated CAC can waive ECAI rating, no additional interest or additional commission to be charged. So up to this, there is a change as compared to last year. Changes are there. So examiner may ask in the exam. Okay, that you know. Then downgradation in the risk rating, both external and internal. What is additional interest to be charged? So this question was not asked last time. So there is a probability of asking the question this time. Downgradation in the risk rating. And then when downgradation by 2 notches, besides the additional interest, we should get the additional collateral. If that does not come within 6 months, what is the additional interest we have to charge? That also we have seen. When both external and internal is available, we go by the external rating. When it is external is not available, we go by the internal rating. Okay, then that is whether, next point is whether when the downgradation takes place, whether we have to do a valuation of the assets taken as the collateral for that loan account. If downgradation is by 1 notch, no need for fresh valuation if the previous valuation report is not more than 6 months old. Otherwise, we have to do a fresh valuation within 3 months. If the downgradation is by 2, I think we saw it under the valuation policy also, 211/2025. If downgradation is by 2 notches, then fresh valuation to be taken within 3 months of downgradation, irrespective of the date of previous valuation. If downgradation is by 2 notches, so then fresh valuation to be taken within 3 months. Here, if the valuation is not more than 6 months old, we need not take. If it is more than 6 months old, we have to take within 3 months. Here, irrespective of the date of previous valuation report, within 3 months, we have to take a fresh valuation if downgradation is by 2 notches, applicable both for fixed collateral as well as fixed as taken as collateral as well as inventory. Okay, this is applicable. Then upgradation. So we saw with regard to downgradation. So when the earlier last year circular has come, they did not tell about the upgradation. Then suddenly after some time, they told about the upgradation. Whenever there is an upgradation in the risk rating, either external rating or internal rating, whether additional interest, any concession can be given to the borrower. Yes. So if the external rating is by, that is from AA, it improves to AAA. What is additional concession in the interest rate we can give like that. The slabs are, it is not straight away that 0.50, 1%, 1.50 like that. It is not there. The rate of interest is of concession what we can give is various slabs are here. This number this we should know by number. AAA to there's a AA to AAA. In the improvement in the risk rating, external rating, then from A to A to AA, like that it is given here. So so we can give concession. But the question is, similarly, internal risk rating, whenever there is an upgradation of internal risk rating, certain grades, whether we can give concession, yes, we can give concession. But while giving concession, two things, this year one circular come, 148/2025, till last year, when they give the additional, concession in the rate of interest, whether for all exposures we can give. I told you in the case of the downgradation in the risk rating, irrespective of the exposure, additional interest to be charged, either internal rating or external rating. I told you internal rating, we have portfolio model, small value model, manual value model, and Canada internal risk rating model. So in those cases, irrespective of the exposure, even 20 lakhs exposure, even 40 lakhs exposure, or 2 crores exposure, 1 crore exposure, if there is a downgradation, so with those exposures, you need not go in for an external rating, because external rating is 50 crores and above. So internal rating would have done. Based on the internal rating, if there is a downgradation, irrespective of the exposure, we have to charge additional interest and additional collateral if there is more than 1 notch. Coming to that is giving concession for upgradation of the internal risk rating or external rating. What is the concession we can give? I showed you to that. But for not all exposures, concession cannot be given. You see the slide. Whenever there is an upgradation in the external or internal rating of the borrower, for exposures above 7.50 crores only, So above 2 crores, we will do under CIRM model, or if it is above 50 crores, we will do under ECAI rating. So, so in the case of upgradation of the risk rating, either internal or external, exposures for above 7.50 crores only, if there is upgradation, we will give interest concession. For exposures below 7.50 crores, if there is upgradation in the risk rating, either internal only, there is no concept of external. So whatever model we are doing internal risk rating, if the exposure is 7.50 crores or below 7.50 crores, if there is upgradation, we will not give any interest concession. Okay, sir, that point we should know. And this year, okay, again the concessions, whatever it is. So here, so 149 bar 2025, I told 148, I am wrong, 149. Whether in the case of downgradation, irrespective of the exposure, we got to charge additional interest. So that is irrespective of the exposure, immediately at the branch level, whomsoever is the sanctioning authority, you have to charge additional interest till the review takes place by some other authority, who is the authority who has to do the review for that account. In the case of upgradation, only if the exposure is above 7.50 crores, we will give interest concession in the case of upgradation. So till last year, this point was not that. Now it is told at the branch level or at the various levels, we cannot give the concession even though there is upgradation and the exposure is 7.50 crores. Some authorities have been given the authority to give the interest concession permission when there is upgradation of the exposure, when the exposure is above 7.50 crores. Interest concession will not be given automatically in case of upgradation of rating. Authorities to permit concession on a case-to-case basis only. There you see downgradation, yes, at the branch level we have to do it. Below circulate powers, circulate CAC is the authority to give concession. The note has to be placed before him. So for giving concession when the exposure is above 7.50 crores. Circulate CAC power accounts. CGM, GM, HO, CAC. So circulate below circulate CAC, circulate CAC has to do the permission. So circulate CAC power account, CGM, GM, HO, CAC has to do the power. HO power accounts, respective sanctioning authorities. HO power accounts, RSA means respective sanctioning authorities. MC power, CAC of the board to be permitted. Proposals to be permitted subject to certain conditions. Okay, this is a new circular in the year 149 by 2025 with regard to upgradation of internal rating and giving interest concession. Again, I am telling it is above 7.50 crores only. That has come last year itself. Now the concession cannot be given automatically. Some authorities have to permit. Who are all the authorities? Up to circulate the CAC power account, circulate the CAC, circulate the CAC power accounts, GCGM, GM, HO, HOCAC. Then HO authorities, respective sanctioning authorities, MC management committee power accounts, CAC of the board has to permit subject to certain conditions. 149 by 2025. Okay, sir. Then that is with regard to risk rating. Any questions are there? We will see. Any questions are there? We will see. This is paper is not moving. That's why I have to. Yes. Now here, I think we have seen up to some questions yesterday. Okay, so question number 16 we'll see, sir. Question number 16. Which is the odd man out? Which is the odd man out? So question number 16 we are seeing which is the odd man out. You see CAP, Fitch, ICRA, ACUITE, Info, INFO, MERCS, which is the all these things are risk rating agencies. Okay, but out of this, which is an odd man out? So that is if you see CARE, FITCH, ICRA, ACUITE, Informex, all the five are the risk rating agency. But if you see, CARE is a domestic risk rating agency. ICRA is a domestic risk rating agency. ACUIT is a domestic risk rating agency. In INFO, MERICS is a domestic, whereas Fitch is a international rating agency. So, which is the odd man out? The odd man out for this question is already B. Okay. Take the odd man out, question number 17, in respect of internal rating. You see, I told you, that is internal rating, CNR 1, minimal risk 1. B, CNR 9, high risk 1. C, CNR 5, low risk 3. D, CNR 8, moderate risk 2. C, E, CNR 6 is a normal risk 1. So out of this, which one does not match correctly? That is the question. So which one does not match correctly? So CNR 1. So minimal, so that is answer is so answer is E, you see. The answer for the question is CNR 6, it is mentioned as the normal risk 1. So CNR 6 is not the normal risk 1, which I already showed you. It is something different. So which is the odd man out. So we have to see which matches correctly. CNR 6 is not normal risk 1. So this does not match correctly. Question number 17, answer is E. Question number 17, answer is E. That's why I told you the risk grade and the expansion for the risk grade as far as the domestic rating is concerned, we should know. Okay, or they may give the question. A risk rate in the exposure of the the exposure of a borrower is that is 8 crores. So the internal risk rating has gone from CNR 8 to CNR 5 or whatever it is. So what is additional interest to be charged, or what is a concession can be given? So these are all the questions, maybe possibility with regard to the risk rating, external and internal. So please go through it. So then question number 14, 149, question number 18, you see. Question number 18 we are seeing now. As per HO Circular 149 by 2025, whenever the risk rating of the borrower is upgraded, concession interest rate can be permitted. Concession interest rate can be permitted. For loan accounts falling under the branch powers, who has to accord permission? I told you downgradation, so no permission is required. It has to go automatically. Coming to the days, sorry. So HO, so this we already see. Questions we have to see like that. So. Okay. Again, it is showing the same thing, creating problem for me. No, it's not going. Okay, sir. We will continue with that questions subsequently. So okay, we'll quickly go through the PowerPoint, sir. Then we will go to the questions and we can study separately. So this is with regard to internal risk rating. Now the question is, the other point is AOD. So acknowledgement of it, all of us know it is not a big thing. So now certain things I have taken here. Suppose if they give you, so in which fast path in CBS the AOD obtention has to be uploaded, has to be updated, because there is in HO Circular 833 by 2024 after a last exam, a point has come. That is why it is a must. Whenever AOD is obtained, that has to be updated in the fast path. So CBS fast path is BA020, and a business intelligence report 331107. If you download, it will give wherever AODs are not updated, that it will give blank against, or a previous whatever old date is updated, it will show that. So the fast path we should know, and the business intelligence report you know, and what is the report return in which the AOD's details to be submitted to the controlling office. PRR, periodical review return, PRR 12. So what is the periodicity? Last Friday of June and December. So we should not miss it. PRR 12, last Friday of June and December, fast path in which it has to be updated, which is the business intelligence report. Then, because in 834 by 2024, bank has come out with a guideline, SMS to the registered mobile number of the borrowers and the completion of 30th month, 32nd month, and 34th month will be sent to your SMS if they are not given the AOD. Even if they are given the AOD, if it is not updated in the fast path BA020, even then they will get an that is SMS from the bank. So that means, so whatever, whenever whenever AOD has obtained, it has to be updated in BA020. So when they will get an SMS, if the AOD column is blank in the business intelligence report, whether we obtained or not updated, not obtained at all, as at the end of 30th month, 32nd month, and 34th month, if AOD is not obtained and not updated in CBS fast path, so BA020. That is HO circular 834/2024. Okay. Then I already told you with regard to fixation of the repayment period with regard to the term loan. So what is how to fix the repayment period with regard to the term loan? So the residual life, as per the latest available valuation report, we have to see what is the residual life of the property. So accordingly, we have to fix the last repayment date. So if it is other than housing loan, when we are giving a housing loan purchase of a second-hand house, there is a guideline.
Sir,
for all other loans, what
sir,
is that?
PPT varla.
PPT varlaya.
Only PDF is on the screen.
PDF இருக்கா? எனக்கு வந்து PPT தெரியாதுமா.
நீங்க ஸ்கிரீன் ஷேரிங்ல அந்த PPT செலக்ட்
பண்ண வருதா?
வரல. வருது.
சரி, இது நோ சம் ப்ராப்ளம். ஓகே. ஏதோ ஒரு ஸ்லைடு இப்போ வர்றது இது. அதான் அந்த கொஸ்டினை நான் வந்து பிபிடி முடிச்சிடுறேன் முதல்ல.
ஓகே.
Then I will go to the question once because மாறி போனா நான் பிரச்சனை பண்றது அது. I will go straight away. That's why I went for the PPT. Now it is available. Anyway, I will talk to them now. Okay, so that is this is a slide which I have been talking about. So this is a slide which I have been talking about with regard to AOD. So acknowledgement update, that is fast path BA020, in which it has to be updated. So the business intelligence report is 331107, which will give whether the AOD is there in the account or not. So only after obtaining the AOD, if you update in that, we will get, otherwise it will be blank. So PRR 12 periodicity is last Friday of June and December. None of the questions we should miss. Why I have put these points here? Because on 30th, so HO has come out a circular 834/2024 after your exam. As at the end of 30th, 32nd, and 34th month, if the AOD column is blank in BA331107 or in the fast path BA020, SMS will go to the borrower to update the AOD with the branch. That is why, so it is a must for updation of AODs in this fast path BA020. Then fixation of the repayment period for the term loan, which we already seen. So two types of fixation. One is second-hand house and all other loans. So in the valuation report, we will get what is a concept known as the residual life of the property. So when in case of other than second-hand housing loan, the residual life of the property should be at least 5 years more than the last repayment date. Again, repeat, in the case of house other than second-hand housing loan, whenever there is collateral or something is taken for your loan, the residual life of the property should be at least 5 years more than the last repayment date of the loan. With regard to housing loan, second-hand housing loan, when you go for a second-hand house, we will get the valuation report given by the panel valuer. The residual life of the property should be at least 10 years more than the last repayment date. Accordingly, the repayment period has to be fixed. For example, a second-hand house or residual life, let us assume it is mentioned there 15 years. For housing loan, you can give 25 years, 35 years repayment, etc., depending upon various cases. But this also we have to take into account. So even though a borrower is eligible to repay for 25 years, in such cases, we have to restrict that is repayment period. Housing loan residual life is 15 years. House property, the residual life is 15 years. If loan is given today, the last repayment date should be 5 years from today, so that the left out residual life of the property will be 10 years after the last repayment date. Okay, this point we have to keep in mind. Then, so HO circular 23/2025 ensure New gold loans are not sanctioned to close the existing gold loans. End use of the proceeds of the new gold loan to be ensured. End use to be properly documented. So obtain and upload a proof of land records for agricultural gold loans where aggregate sanctioned limit is above rupees one lakh. So that is earlier it was obtaining land documents if that is agricultural gold loan, either crop cultivation purpose or development purpose, is above 3 lakhs. In the last year in 2024, it was brought down to 1 lakh. Now, as per modified in 578 by 2025, I have given here, agricultural gold loans up to 2 lakhs can be sanctioned subject to voluntary pledge of gold as a collateral by the borrower. Because of this, what has happened now in 578 by 2025, loan quantum has to be arrived by considering the estimated cost, expenses towards crop cultivation, strictly as per scale of finance, land development activities, and agriculture and allied activities wherever applicable. Mandatory obtain and upload. See, branches have to mandatorily obtain and upload land records, document proof of activity for all the agricultural gold loans, irrespective of the loan amount. No question of here afterwards. Earlier it was 3 lakhs, now reduced to, last time it was reduced to 1 lakh, now in 578, irrespective of the loan quantum. So proof of land record, proof of activity, or documentary proof of the land what he is having has to be obtained and uploaded. No question of only above 1 lakh, above 3 lakhs. If that question comes, don't miss it. We have been under the impression above 1 lakh, no, irrespective of the loan amount. Gold loan sanction letter come pass card and key fact statement should be filled in all aspects and invariably handed over to the borrower against his acknowledgement. So end used to be ensured, that is 578 by 2025. So one point what we got is irrespective of the loan amount, agriculture land records to be uploaded. So earlier it was 3 lakhs, now then it has been reduced to 1 lakh, now irrespective of the loan amount. Okay, then credit facilities sanctioned by MSME Sulab, you already know, to be reviewed in the labs by next higher individual authority at RO before disbursement. It is a the manual value model which we discussed some time back. The manual value model, it has to be got reviewed and that is confirmed by the overseeing executive overseeing the assurances section in RO or CO, depending upon where the branch is reporting. So then only the sanctioning authority can sanction the loan. Similarly, so credit facility is sanctioned by the MSME SULAB to be reviewed in labs by the next higher individual authority at RO before disbursement. This is one more thing which has come this year. All of you are aware. Renewal with enhancement, midterm enhancement, and fresh proposals, including taken over proposals, to be sanctioned by MSME SULAB only after this has to be done. Proposals up to 1 crore to be reviewed within 2 working days and above 1 crore to be reviewed within 3 working days. After the review one over is only, this can be disbursed by the sanctioning authority. So up to 1 crore within 2 days the review to be done, above 1 crore. So within that is 3 working days the review has to be completed, which will enable the branches to disburse the loan. Then 94 by 2025, another circular has come. Gold loan checking through gold purity testing machine, that is GPTM. Now, by the branch officials are supposed to check the gold purity test through the gold purity testing machines after appraising by the jewel appraiser. Report generated through the system attached to GPTM to be signed by the staff tested the purity branch in charge and the borrower. You know the word branch in charge. So branch, whomsoever may be the branch in charge, it may be scale 2, scale 3, scale 1, or scale 4, or scale 5, whatever it is. The branch in charge, along with the officials who have signed the test for purity and the borrower to be signed and kept safely, to be attached with the GL application, weekly report by branches to RO as per the format. Then 400 by 25 has been introduced. This all more security measures have come into the gold loan because it is a fraud prone area. A lot of fraud is taking place in many banks in the gold loan area. Early closure of gold loans. So whenever the gold loans are closed within a month of disbursement, that means something fishy over there. Whenever the gold loans are closed within a month of disbursement, there is a Oracle Business Intelligence Report 271025 and 271025A. It is a pre-filled format. So we can generate the report at the end of the month at any time. This will give which are all the gold loans in the branch with the details are closed within 1 month of disbursement. Branches are supposed supposed to generate the report, check at the end, and send it to regional office on or before 7th of the succeeding month. If they ask the question, you should not miss it out anything. So 400/2025, gold loans close yearly closure within 1 month. 2 business Oracle intelligent reports are there. Download those reports and it has to be checked and verified, and it has to go to that is concerned RO on or before 7th of the succeeding month. And this one, the GPTM report has to be signed by all these people, the officials who have tested the purity or the branch in charge and the borrower. Then, so 821/2024, all of you are aware, introduction of gold loan packets, inward and outward register. Introduction of gold loan packets, inward and outward register, NB 191. For recording inward and outward movements of gold loan packets. So if they ask what is a register introduced, NB 191, NB 26, NB 48, like that. Okay. Introduction of gold packets, inward and outward register, NB 191, for recording inward and outward movement of gold packets. Gold loan balancing report monthly, last Friday to be generated. Packets are to be checked and confirmation to be given by the key holders in NB 191. Last few pages as per the format in the circular. Because last time suddenly what is a register number for mortgage or like that. So suddenly the examiner may take NB 191 gold loan movement register, gold loan packets, inward and outward register, and when the balancing report to be taken monthly last Friday. That two points may come. You should not miss it. That is why I given 821. This circular has come after your last exam. That is why I brought that circular also here. Then there is HO Circular 2/2025, introduction of sequence number for gold loans to facilitate easier arrangement and balancing of gold loan packets. 17-digit sequence number is introduced. First 5 digits, the branch code. Next 2 digits, year of the loan in YOE format. Next 5 digits, the product code. Next 5 digits, running serial number of that particular product. In addition to this, the 17 number digital sequence number, even for retail loan also it has come. That's what I have seen somewhere. In addition to the 12-digit loan account number, CBS will generate the 17-digit sequence number also. Okay, please keep in mind any questions may come in that. So newly introduced serial number, sequence number, and what are all the digits that represents in that 17-digit. Okay, that also important. So it can be viewed in CBS fast path LNM 10, ALM 10, and CX031. Sequence number balancing report can be generated in BAX 606. Branches to document the sequence number populated in labs in GL application form. Sorry. Branches to document the sequence number populated in labs in GL application NF497, GL sanction letter cum pass card NF1075, GL ticket NF367, and GL packets inward and outward register NB191. See, so these two circulars have come now. With regard to NB139, they may ask, so which that is what is NB191, or which is the odd man out with regard to NB191. Any question will come. If we are thorough with the subject, we can answer the question. Otherwise, only which answer, correct answer we have to check. There will be a dilemma at the time of the examination. Okay, now the NB119 also has come here. So a sequence number for gold loan, where it is available, what it can be sent, you can see. Similarly, bank has introduced in 497/25 sequence number for retail of the same digits, 17 digits, can be viewed in CBS fast path LNM 10 to be documented in loan application and other loan documents. Okay, don't miss it. If the question comes, you should. It may look like a silly question for some higher grades, but examiner will not think that silly question. He may ask us. So we should be thorough with that. Then what is that? Consent code for credit proposal. Consent code for the credit proposal. Branches to enter in labs the applications on the same day of submission by the borrowers. System will generate a consent code OTP and delivers to customers' registered mobile number. They same to be validated in labs to process the application in labs. For generating the credit information report, CIC, credit information report through labs, a consent code will be sent to the customer while fetching the customer ID. This has to be validated for further processing of the credit information report. Whenever you are doing the job through labs, I think we are supposed to do the job nowadays only through labs. So a consent code will be go to the borrower. Yes, you can further proceed. And then similarly, when you are before generating the credit information report of a borrower through labs, a consent code will go to the borrower. Only when you get the OTP, when you validate the OTP or when he validates the OTP, so you can further process, generate the credit information report. Okay, then customer can track the status of the loan application through loan application tracker portal in bank's corporate website. Customer can log on the portal with the customer ID. So a customer code is sent to the customer registered mobile phone whenever he logs in. Labs have the provision to reject the application, the date of rejection with the reasons. Sanctioning authority can hold the application for delay in submission of documents by the customers. This is not applicable for gold loan and educational loan. See, finally, what say I? See, suppose if they ask, so that is, which is the odd man out with regard to gold loan or education loan as per HO Circular 8/2025. These things, the customer concern code, CAR codes, etc. These things are the two loans exempted today are the gold loan and the educational loan. That's why I have made this much presentation. Then, so pre-release audit, HO Circular 896/2024, all of you are aware by this time, and 158/2025 with regard to pre-release audit. Both the circulars have come after your exam. Exposure of 2 crores and above. You may note it down. The exposure of 2 crores and above. We should know about 2 crores or 2 crores and above. It is 2 crores and above. So less than 2 crores. What is available in the bank, sir? Can you think? Can you recollect and tell? So 2 crores and above, we have pre-release audit. For less than 2 crores, this year 496 or something, one circular has been introduced by the bank. I don't remember the circular number. So for less than 2 crores, it is supplementary LSR. We were talking about in the first class. If it is less than 2 crores exposure, so already you are having an exposure of 1 crore and you are going to give 1.50 crores, increase the exposure. It has not touched 2 crores. In that case, we have to get the supplementary LSR from a panel advocate who has not given the original LSR. Okay, we saw. So if it is 2 crores, and our first question also with regard to that one only. If the exposure is 2 crores and above, then we have to go in for the pre-release audit for both for the new parties and existing parties. Straight away a party is coming, exposure is 2 crores and above, go for pre-release audit. Already a party is having 1.75 crores, he is asking another 50 lakhs, it crosses 2 crores, go in for a pre-release audit. Rupees 2 crores to 3 crores, who has to do the pre-release audit? Scale 2 and above, preferably second line managers and senior managers from the neighboring branches. Rupees 3 crores and above, scale 3 and scale 4, and scale 4 and above, scale 3, scale 4 and above, working in RO or CO has to do the pre-release audit. The idea is branches should not be disturbed for this work. Retail lending, it is 5 crores and above, loans which are backed by mortgage, either primary or collateral loan. For example, whenever it is that retail lending 5 crores and above, housing was the primary security, other look and draw mortgage, it is a collateral, etc., etc. Retail lending 5 crores and above, primary or collateral, we go in for pre-release audit. Disbursing branch has to mandatorily request for pre-release audit for all eligible accounts in SIS package to circle office after completion of all documentation, other compliances as per sanction terms and conditions. Circle here, I have come here. This is again stressed in 158/2025. Circle office to ensure the allotment and conduct of pre-release audit by the authorized person at disbursing branch, punching of observations and acceptance of observations by branch within the time frame of 48 hours. That means the pre-release audit to be complete after the completion of everything. The circle has to ensure that pre-release auditor completes the exercise within 48 hours. Then it has to be uploaded by the branches. Disbursing branch has to ascertain and all branch compliances. All branch compliances in the SIS package are accepted by circle office and the account marked for closure before disbursement. So the 48 hours, then exposure, then who has to do these things. So through which package we should know with regard to pre-release audit. So this is what the changes that has come. So we are discussing, keep in mind, we are discussing the changes that has come after October 2024, maybe till July. Okay, so these are all the things, the basic things we are supposed to know long back. Then, so now the one important point, credit sanctions. So there is a change has come here. That is why I brought it on here. The delegation 258/2025, a change has come. So credit sanctions, that is to close relatives of the borrower. So who are all the relatives of the borrower? Out of the relatives, who are all the close relatives? Keep in mind, whenever we give a loan to the close relative of the borrower, close relative only, not relative. From the relative, some people are taken as close relative. If he is not close relative, respective authorities can sanction up to the delegated power. A borrower is having a loan. If his close relative is asking a loan from us, whether the respective sanctioning authorities can sanction or it has to be sanctioned by the next higher authority. That is the question now. So now what is the guideline? What is the change in the guideline? With the 2-3 tables, if we go through, you will understand it. So relatives of the borrower and close relatives of the existing borrower and close relatives for the retail loan that was introduced in HO Chapter 51 by 2023. So let us concentrate on the close relative of the borrower. Let us not worry about the relatives. Okay. So loans advances to close relatives of the borrower. Your credit policy or delegation says like this. Proposals of close relative other than agriculture and personal, that is retail loans. Proposals of the close relatives of the borrower other than, keep in mind, proposals of the close relatives of the, who is close relative, we already seen. Proposals of the close relatives of the individual borrowers. The borrower is an individual. Proposals of the close relatives of the individual borrowers. And if the borrower is a proprietor and his close relative is asking, Mr. X is a proprietor, his close relative Mrs. X is asking a loan. So the close relatives of the proprietor in the case of a proprietorship firm and a close relative of a partner in a partnership form. We are already having a loan for a partnership. So some partners are there. His close relative or her close relatives asking a loan. So proposals of the close relatives of individual borrowers or proposals of the close relatives of a part proprietor in the case of a proprietorship firm, proposals of the close relatives of the partners in the case of a partnership firms who are already having exposure with us, who has to sanction a loan to those people, close relative. So what we are going to see is not applicable. What we are going to see, who has to sanction the loan? It is not applicable for accounts falling under the delegated powers of circular CAC and the above authorities. Before the circular 258 by 2025 is issued, this is applicable even for all the accounts irrespective of the sanctioning authority. Now the concept of close relative sanction is applicable less than circulated CAC and above authorities because circulated CAC and above authorities can sanction. No restriction. Now let us see who has to sanction. With regard to circulated CAC accounts or above accounts, what is the guideline? Okay, sir, this is the change in HO Circular 258 by 2025. See, I have given a table from that one paragraph, what is available in your delegation. I have made a table. So borrower, individual borrower. Mr. X is an individual borrower. He is having a business loan, an MSME loan, or he is having an agricultural loan or retail loan, or all the three loans, let's assume he is having. Either he may have an agricultural loan only, or retail loan only, or business loan only, or all the three loans, or any of the two loans. Mrs. X is approaching for a loan from the borrower. You know, Mr. X is a borrower, means Mrs. X is obviously, she is a close relative. Mrs. X is approaching for a loan. So he is having all the three loans, and Mrs. X is asking an agriculture or retail. Or this man is having a business on agriculture. She is asking agriculture or retail. This man is having a business or retail. She is asking agriculture or retail. He is having agriculture or retail, or both. She is asking agriculture or retail. See, loans to close relatives. What the para says, other than agriculture and retail loans. Okay. So what the close relative is asking? So the close relative is asking agriculture and retail. So even though the existing borrower is having agriculture or retail, the same respective sanctioning authority can sanction this agriculture or retail loan to the close relative if it falls within the sanctioning authority's power. You need not say, since he is having an agricultural loan, this agricultural loan proposal has to go to the next higher authority. So you see the next point. Mr. X is having a business loan, agriculture or retail. Mrs. X close relative is asking for a loan. She is asking a business loan, or she may ask an agriculture loan or retail loan. Other than agriculture and retail only should go to the next higher authority of the close relative if the borrower is having a business loan. So the borrower is having a business loan, his close relative is asking a business loan. So it has to go to the next higher authority for the business loan. Respective sanctioning authorities can sanction agriculture or retail loan. Similarly, Mr. X is having agriculture or retail. Mrs. X is asking a business loan, agri or retail. Since Mr. X is not having a business loan, all the three loans can be sanctioned by the respective sanctioning authority. Mr. X is asking agriculture or retail. Mrs. X is asking agriculture, retail or personal loan. The respective sanctioning authorities can sanction. Other than agriculture and retail, if a borrower is having a loan, then that is the close relative is asking. We have to see what the existing borrower is having a loan, what the close relative is asking. If existing borrower is having a business loan and the close relative is asking a business loan, that proposal, even though the business loan of the close relative falls within the delegated power of the respective sanctioning authority, that loan has to go to the next higher authority. Otherwise, the respective sanctioning authorities can sanction, but this is not applicable. For example, let us assume Mr. X, a borrower, is having a business loan. And it falls under the circle-head CAC's power. So now the Mrs. X close relative is asking a business loan. So that loan can be sanctioned by the circle-head CAC himself or herself if it falls within their power. Only below circle-head CAC, the business loans the borrower is having, close relative is asking, that has to go to the next higher authority. Circle-head and CAC and above authorities, they themselves can sanction the business loan of the close relative. That is a change in 258/2025. Similarly, proprietor. A proprietor is having, proprietor is Mr. X. The close relative of the proprietor is asking a loan. Again, the same concept only. Business loan, that is, he is not asking a business loan. Respective authorities can sanction. When she is asking a business loan, it has to go to next higher authority. The same concept of what I told you about as circulated CAC and above authorities to be followed here. Similarly, proprietor, a proprietorship account we are having, C and D are the proprietors. So Mrs. D, one of the partners, one of the partners, wife Mrs. D, close relatives asking a loan. Again, the concept of business loan, retail loan, agriculture loan, we have to see. Accordingly, it has to be sanctioned by respective authorities or next higher authority. In the case of a circulated CAC and above authorities, they themselves can sanction the business loan of the close relative if it falls within the circulated CAC and above authorities power. It need not go to the next higher authority for sanction. Okay, then some more points. Sanctioning loans to partnership firms where the partners are close relatives. Let's assume a proposal is coming to us for that is a partnership firm. Whatever the loan the partnership firm is asking, so we find out that partners are close relatives. Somehow the partners are close relatives. Let us not worry about it. So sanctioning of loans to partnership firms where the partners are close relatives. For a particular partnership firm where all the partners are close relatives or some of the partners are close relatives. A, Mrs. A. Mr. A is a partner, Mrs. A is also a partner. Or that is Y is a partner, Mrs. Y is also a partner. So whether it's all the partners are close relatives, or some of the partners are close relatives, the respective sanctioning authority can sanction the loan. Loans to a partnership firm, here you see when it has to go to a next higher authority. Loans to a partnership firm where any of the partners are close relative of the partners of another partnership firm which is enjoying the limits. For example, a partnership firm A is having two partners, A and B. Let's assume the A and B are the two partners. That partnership firm is coming for a loan, is having a loan account already with us. A partnership firm having two partners, A and B, are having a loan account with us. Now, let's assume another partnership firm is approaching for a loan from us. Another partnership firm is approaching. When we see the partners in that new partnership firm which is asking loan from us, we find out Mrs. A is one of the partner in the new partnership firm which is asking a loan from us. Already, we are having a loan of a partnership firm. A and B are the partner. So that is whether the partners are the close relative or not, we can sanction the loan for that partnership firm. A new partnership firm is coming to us, we are asking. Then we have to see who are all the partners in the existing partnership firm for whom we have sanctioned the loan, who are all the partners of the new partnership firm. If any partner is a close relative of a partner of the existing partnership firm, then that proposal has to be referred to the next higher authority. Okay, this is already existing guideline, nothing new over there. And I think I don't want to spend much time over here. So this is already there. It is a repetition of the guideline. So loans against domestic term deposits standing in the name of the depositor, margin is 10%. And this is a change that has come the last year. So what is the interest we will charge for loans against deposit? Mostly we call it as VSL, no? The rate of interest is 2% above the deposit rate for loan amount up to inclusive of 2 crores. If the VSL amount is up to inclusive of 2 crores, we charge additional 2%. If we charge 1% above the deposit for the VSL if the loan amount is above 2 crores. So this is applicable only to domestic term deposits, loans sanctioned to the depositor. For loans against NRE and FCNR deposit, irrespective of the amount of the deposit, additional interest to be charged to the VSL is 2% above the deposit rate. So here, so the 2%, 1%. So normally we say what is the additional interest for the VSL? 2% above the deposit rate. It underwent a change. Now the 2% is only if the loan amount is up to including 2 crores. If the loan amount is above 2 crores, the additional interest to be charged to the borrower is only 1% and it is not 2%. It is applicable for loans to depositors, domestic term deposit in their names. For FNRE and FCNR deposit, the irrespective of the VSL amount, the rate of interest 2% continues. Okay, then the next is, that is all of us are where it is for academic interest. Again, I have made it there. What's the maximum sanction? For example, domestic term deposit. 1 crore is the deposit depositor is having. He or she is coming for a VSL. What is the maximum loan VSL we can give against the deposit? So even though the maximum we can go up to 90% of the deposit amount, different sanctioning authorities are having the power. So again, I want to repeat it because somewhere some people are missing it over there. Scale 1. If the branch is headed by a scale 1, he or she, even though the deposit amount is 1 crore, he or she cannot sanction 90 lakhs as the VSL. The maximum power is 25 lakhs. Against the third party deposit, the maximum loan he or she can sanction only 5 lakhs. And to a minor's deposit represented by guardian, he or can sanction only 1 lakh. Coming to a scale 2, he can sanction only 50 lakhs maximum. Scale 3 and CM chief managers in BLBs or specialized branches can sanction maximum 10 crores. So even though 90 crores come to 90% comes to 90 crores, they cannot sanction. They can sanction only 10 crores. Like that it goes. So the delegation of power, this we always say margin is 10%. Yes, margin is 10%. Whether all the authorities can sanction 90% of the deposit amount as VSL, yes, 90% can sanction. That is subject to the delegation given to them. This is the delegation of power given to them. Okay, these things are available, and anybody is having a permission to waive the margin or to reduce the margin or reduce the rate of interest, what we have seen. So this slide will give you. Let's not spend much time over there. So with regard to NRE deposit and FCNR deposit, I told you, irrespective of the loan amount, rate of interest to be charged is 2% above the deposit rate. And here for your NRE and the FCNR, the minimum margin is 25%. Where domestic term deposit is 10%. Here some authorities can reduce the margin from 25% to 10%. So in respect of branches headed by scale 1, 2 and 3, AGM, ROCAC and above authorities can reduce the margin up to 10% of the 10%. So CM, AGM, DGM of BLB, ELB and LCB specialized branches can permit the reduction in margin up to 10%. Okay, sir? So with regard to NRE and FCNR, so 25% is a normal margin, but some authorities are having the power to reduce the margin to 10% instead of 25%. And then loans against NRE and FCNR deposit, the maximum delegation power, even though 75% loan can be given or 90% loan can be given when some authorities permit you to give the loan. But however, it is subject to the maximum delegation given to the various authorities in the bank. It cannot exceed that much amount of the loan. Okay, sir, let's not spend over time. And then here, so one important point which I want to stress over here, all of us are aware for that is additional interest are given. Additional interest are given to the domestic term deposit of employees 1%. For NRO, NRE, FCNR, we are not giving any additional interest to the employees or ex-employees. So employees are getting 1%. So ex-employees are also getting 1%. If the ex-employee is a senior citizen, he or she will get 1.50%. All of us are aware, there's no doubt in that. So in the case of a domestic term deposit, employee is putting a deposit by taking a declaration from him or her, he charge 1%. Ex-employees will give additional 1%, and the ex-employee senior citizen we give 1.5. I'm getting 1.50%. If your 444 days deposit rate is 6.5, for senior citizen you give 7, I will get, that is another 1%, 8% I will get. Okay, ex-employee senior citizen 1.5. The next question is, spouse of a deceased ex-employee or spouse of a deceased employee. The spouse cannot open an account in their own name without joining the employer ex-employee if the ex-employee is still alive or the employee is alive. Spouse can open a deposit account in her name individually without joining her husband or his wife only when they are no more. That means spouse of a deceased employee, spouse of a deceased ex-employee, in their name they can open deposit and get additional interest. What is the additional interest we will give? I want to repeat it here to you. Spouse of an employee, deceased employee, spouse of an deceased ex-employee, irrespective of the age of the spouse, whether 60 years or more than 60 years. Again, I repeat, spouse of the ex-employee, deceased employee, spouse of the deceased employee or spouse of the deceased ex-employee, irrespective of the age of the spouse, they will get only 1% additional interest. Suppose if the spouse age is 65 years, so that is ex-employee is not there, we cannot give for the spouse 1.50. The ex-employee senior citizen will get 1.50 provided the ex-employee is alive. Okay, this point I want to drive home. Please take care of it. Then what is the additional interest we will charge? What is the interest to be charged on the VSL of the employees or the VSL of the employees? That is given in HO Circular 451 by 2018. That was a circular last. I have not seen subsequent to that. And loans against our term deposits to employees and others who are eligible for preferential interest rate on deposits. Who are eligible for preferential rate on deposits is given in HO Circular 92 by 2024. From there only I told you, spouse of the deceased ex-employee or spouse of the deceased employee, 1% only we can give, 92 by 2024. So when we give a loan to the deposit of the employer ex-employee where they are getting preferential interest, for loan amount up to 1 lakh, 0.25% above the deposit rate. More than 1 lakh up to 5 lakhs, 0.5% above the deposit rate. More than 5 lakhs up to 10 lakhs, 1% above the deposit rate. More than 10 lakhs as applicable to the customer. Now up to 2 crores, including 2 crores, we charge 2%. Above 2 crores, we charge 1%. So above 10 lakhs, as applicable to the customers, we have to charge rate of interest for the BSL for the loans to employees against their own deposit. Okay, for loans above 10 lakhs, circular can reduce up to 1% above the deposit rate. All those things, let's not worry about it. This is what we should know. Then HO Circular 70 by 2025 talks about obtention of the external due diligence report from empaneled agencies for MSME units who approach our bank for the first time for credit facilities above 10 lakhs and eligible to be covered under CGTMSE. These are all the earlier circulars. So that is whenever an MSME is approaching, MSE is approaching for a loan from us, and if it is eligible to be covered under CGTMSE, a due diligence to be done. Not only for those accounts, for other accounts also, at the discretion of the sanctioning authority, due diligence has to be done. Who are all the due diligence agencies? External due diligence agencies, EDD. MSME in SAS model. So through this model, a request to be placed to the agencies and payment of service charges through this package only. HO Circular 464 by 2023. Now modifications has come in 70 by 2025. So what I want to drive home is, whenever that is MSE units are approaching us for a loan for the first time, credit facility, and if they are eligible to be covered under CGTMSE, and if the loan is above 10 lakhs, before covering the loan under CGTMSE sanctioning, a due diligence to be done about the MSE units through the appropriate due diligence, external due diligence agency, EDD, okay, to be done. So even for other loans also, at the discretion of the MSME Sulabh head or branch head, whatever who is the authority, we can do the due diligence report. So in there is an EDD, MSME in SAS module is there. Through that, a request to be placed to the due diligence agency and fees also to be placed to the due diligence agency. So this is told in 463/2023. Now 641. Last year what was the circular and this year what was the circular? Acumen Business Consultancy Private Limited is a due diligence report. It is renewed till 2/8/2027. Charges up to 2 crores, we have to give 5,000 rupees. Above 2 crores up to 10 crores, the charge is 7,500, and above 10 crores, the charge is 10,000. So if anything else, you should not miss it. Then Informix Analytics and Research Private Limited, this is the renewal period up to 14/9/2026. It was renewed. So charges it is given up to 25 lakhs like that, various charge. So this is Acumen Business. So they may give, which is the odd man out. So they will club your, that is credit information companies, that like your Skibble, etc. And then risk rating company, domestic risk rating companies, and external credit risk rating assessment institution, and then external due diligence intelligence agencies. Anything they will club and they will ask, tick the odd man out. So with regard to external due diligence agency, we should know there is Acumen Business Consultancy, Informix Analytical and Research Private Limited, CRIF Solution. So this is also renewed till 19/9/2026. The charges what given here, it is also mentioned. If they ask the charges also, you should not miss it out. Then 17/2025, bank has entered into MOU with Mrs. B2K Analytical Private Limited, formerly known as Brickworks Analytical Private Limited, is renewed for a further period of 3 years from the existing charges valid from 2025 to 2028. So CRIF solution is, there is B2K Analytical Private Solution is the fourth agency. We have here, if I see two agencies, and then CRIF Solution is the third agency. And then as per HO Circular 70/2025, we entered into agencyship with B2K Analytical Private Limited. So the validity period is 3 years. The fees to be collected from them is this much whenever they do a due diligence report based on the loan amount, differential amount to be collected, fees to be collected. This to be done through the package which is given in HO Circular 464/2023. So the new addition to the due diligence agency is that is B2K Analytical Private Limited. Okay, sir. Branches to send all the details to designated email of the agency through EDD package. Agency to send a soft copy of the report within 3 working days to get the full fee. Sometimes somewhere I ask the question. Agency has sent the report on the 5th day. How much fees to be paid to the agency? So you should know the fees, what is the fee structure of the agency. And then within 3 working days, if they send you the report, then we have to pay the full fees as per the fee agreed structure. After 3 working days, up to 7 days, so up to 7 working days, if they send the report of the due diligence agency, so bank has to pay 50% of the charges. After 7 working days, if you get the report, there is no need to pay any charges to the due diligence agency. Okay, then that was given in HO Circular 70/2025. With regard to 70/2025, we saw the external due diligence agency for whom we will appoint the external due diligence agency. MSC units approaching us for the first time for the loans which are to be covered under CGT MSC. So about 10 lakhs for those accounts, and also any other MSME unit if the sanctioning authority desires, we can entrust the work to the external due diligence agency. That also we saw. And which are all the external due diligence agency? We saw 3 external due diligence agencies are there, and the fourth one has been MOU has been entered into. And what is the fee structure for them also we saw, and how to send the request to the due diligence agency, and within how many days they have to submit the report. If they do not submit the report within that is recognized days, how much fees to be paid, that also we saw. Those things are in HO Circular 70/2025. Okay, then loan to stressed sector. So HO Circular 72/2025, and earlier there was a Circular 52/2025. Both the circulars came after the last exam. Sanction of loans to borrowers under sectors identified as stressed sector by the bank. So what is a stressed sector? Which are all the loans which when you give to the particular party, you call it the loan for the stressed sector, where it is available. It is available in risk management being web page, industry research desk, stressed sector. Whenever we give loan to to those industries or to units, then certain guidelines, who is the sanctioning authority, what to be done, a modification has come in 72 by 2025, maybe scale 4 and above. So you should be able to know because they may ask the questions. So new customers, suppose if the borrower is new to the bank, who is new to the bank? That concept of new to the bank, new customers, etc., varies from circular to circular. With regard to loans to new borrowers under the stressed sector, who is called a new customer to the bank? Customers not having any existing credit facilities with our bank shall be treated as a new customer. You see the definition. It varies everywhere. For MSME and CGTMSE, definition of new customer varies. Like that, it is varying. So we should be very specific. As per HO Circular 72 by 2025, loans to stressed sector. So there are two types existing, how much collateral they have to bring. That is a guideline has come. So the revised guideline has come. We are seeing only the revised things which has come in the last year. So as per the revised guidelines, loans to stressed sector, what is a stressed sector, where it is available under the risk management web page, it is available. So then for the risk stressed sector, two types of customers, new to customers and existing customers. What is new to the customers? New to the customers means, new to the bank means they are not having any credit facility. They are not having any credit, not only stressed sector facility. They are not having any credit facility. They are coming to a bank for the first time, and you find out that it is stressed sector. Then what is the collateral to be taken? So, okay, including takeover. You are going to take over a loan for a stressed sector from some other bank. They are not having any other loan with us to be sanctioned with 100% collateral coverage in the form of residential, commercial property, approved securities. Okay, if the 100% collateral coverage is required, or if the facility should be fully covered by central or state government, CGTMSE or CGFMU guarantee. So either this or this, 100% collateral and are fully covered by CGTMSE, GCFMU or central state government guarantee. So in such a case, so this can be taken and appropriate sanctioning authority can sanction. So 100% collateral coverage are to be fully covered by CGTMSE for new customers. Who is a new customer? Is not availed any other loan from the bank. They are coming for a loan and it is appearing in the stressed sector category. Okay, for existing borrowers, person is having some other loan. Let's assume borrower is having some other loan with you, and they are coming for a loan which they are or the loan which they are handling, maybe a stressed sector loan, whatever it is. They are asking additional loan. If they have collateral coverage more than 100%, if they are having a collateral coverage already more than 100%, respective sanctioning authorities can permit enhancement, additional limits subject to 100% collateral coverage, including the enhancement and additional limit. So already if they are having more than 100% collateral, when they are coming for the loan for the stressed sector, by giving the enhancement and additional already more than 100, you are going to put together all the total exposure now along with the enhancement and new thing, it should be 100%. In that case, respective sanctioning authorities can sanction already more than 100. So that is they are asking enhancement, other thing. You take into account everything. So it is coming to 100% with the fresh new, and now after the new additional exposure, the total exposure to the party comes, collateral comes within 100%, then no problem. Respective sanctioning authorities can sanction. For the existing borrowers having less than 100% collateral coverage, it is not necessary for all loans we should have 100% collateral. No, the collateral policy varies. So for the existing borrower, where we are having less than 100% collateral coverage, what to be done? Respective sanctioning authorities can permit with 100% collateral coverage for the additional limit. Existing limit less than 100% collateral. Don't worry, they are asking additional limit. Stressed sector, for that additional limit, ask for 100% collateral. Okay, then in that case, respective sanctioning authorities can permit. If it is less than 100%, the additional collateral which they are going to bring to that new limit is going to be less than 100%. So existing loan, collateral coverage less than 100%. Additional loan which is in the stressed sector, 100% collateral coverage, respective sanctioning authorities can sanction. The additional loan which they are asking, which is in the stressed sector, they are not able to bring 100% collateral, then next higher authority can permit, subject to maintaining collateral coverage at the existing level. Presently, they are having 90%. For the new exposure, stressed sector, 90% to be brought, and then in that case, respective sanctioning authorities cannot sanction the next higher authority to sanction. In all the cases, new and existing CGM, GM, HO, CAC, and above authorities may permit relaxations on a case-to-case basis for accounts up to the delegated powers. Okay, sir, this is what I have taken. Let us not worry about this. Then here, only one point I want to drive home. Compensation for customers for delayed rectification, updation of credit information report. So HO Circular 318/2024 and 97/2025. What the circular says? Credit institutions, credit institution, Canara Bank is one of the credit institution with the institution which is giving a loan. Credit institution to send SMS, email to customers while submitting information to CICs regarding default days past due. So about my loan account, there is a default is there, or there is a number of past due dates are there as per the guidelines that has to be reported to CIC. I should get an SMS from the credit institution. Your loan is defaulted. We are going to inform your name to the credit information company. Customer consent for generation, which I already told you, it is integrated in our labs. So before generating the credit information report of a customer consent, the OTP we have to receive, that has to be validated. CICs, that is credit information companies like your that is your CBIL, etc., Equifax, etc. Credit information. So credit institution means the bank. Let us take it as a bank. Credit information company. We know we have a 4 credit information company. Credit information companies to send SMS, email to customers when their credit information report is accessed. For example, Canara Bank is accessing my credit information report after getting OTP, validating the OTP. Immediately, I should also get an information from the credit information company that your CIR has been accessed, your CBIL CIR has been accepted, has been, downloaded by Canara Bank. I should also get an SMS. Complaints regarding the credit information report to be lodged in CPGRS with effect from, that is 24/2024. They may ask the question. So complaint, customer is having a complaint, with regard to credit information report. I have not availed a loan at all, but my name is appearing as a loan availed in the bank. Or I don't have a loan with overdue, but my name is appearing as an overdue in a CBIL report or any of the 4 credit information report. Then I have to lodge a complaint. In which package? We have a lot of packages, for lodging the complaint, for your technological products complaint, that complaint, ATM complaint, etc., etc. The complaint to be lodged by the customers with regard to the credit information report is CPGRS with effect from 24/2024. Don't miss out this CPGRS. Then that is credit information companies credit institutions have to have a nodal point of contact by CACs. So Canara Bank is a credit institution. Credit information company wants to contact. You should have a nodal point. It cannot contact many people. So in our bank, who is the nodal point? So for customer complaint redressal, in our bank, it is all CIC section. There is a section under Recovery Legal Fraud Prevention Wing, RLPF Wing, expand RLPF Wing, clerical to officer. For clerical to officer, lot of expansions are there. So 5 questions will come, expand RLPF Wing, Recovery, Legal and Fraud Prevention Wing. So the contact point in our bank for this CICs is, there is a section called all CIC section, Recovery, Legal, Fraud Prevention Wing. Any change in the nodal point of contact to be informed to the CIC within 5 calendar days of change. CICs to update the data of customers received from credit institutions within 7 calendar days of receipt. These numbers are important, sir. Within how many days? The credit information. Suppose Canara Bank is sending a credit information report about me. So when the CIC has to update within 7 calendar days of receipt from the credit institution. In case of rejection, CIC is to inform the CIs reasons for rejection within 7 calendar days of receipt. CICs to provide access in their websites, free full credit information report once in a calendar, January to December, to customers. So customers can access their credit information report, full credit information report, by giving certain credentials within one financial year without any cost from 4 credit information company in the calendar year, not in a financial year. This question was asked, somebody has ticked financial year. No, in a calendar year from January to December, credit information, full credit information report can be taken by any individual in the country by logging in the credit information report free of cost. That also we should know. Then this is very important. This slide is very important. If complaints by customers not resolved within 30 days. So I have given a complaint to the credit institution, Canara Bank. So, or I have given a complaint to CBIL, or I have given a complaint to Equifax, whatever it is. So my name is appearing here. So I have not availed a loan. I may directly give to the bank, or I may give to the credit information company. So I have given it now within 30 calendar days. Within 30 calendar days, I should get a reply. Yes, we have changed the details, or we are correct. You have a loan, or you availed a loan, or a loan is written off from us. We are correct. There is nothing to change in that. So within how many days, either the credit information company or the credit institution to send reply to the customer who has lodged a complaint. So the customer should get a reply within 30 calendar days. If I don't get the reply within 30 calendar days, I am eligible for a compensation of rupees 100 per calendar day. So very important. So they may become now a lot of penalties are being imposed on the regulated entities. Regulated entity means there is which are controlled by Reserve Bank of India. So we are also a regulated entity. A scheduled commercial bank is a regulated entity. So within 30 days, the complaints to be resolved. For our bank, customer will lodge through CPGRS. Okay, through PGRS. CIC, they will send the mail to the CIC. Whomsoever receives the mail. So if the CIC receives the mail, you should send to the credit information company. If credit information company receives the mail, you should see and it will inform the credit information. If the CA receives the mail, it will see, the bank will see, and it will give the reply to the credit information company. Finally, the customer has to get a reply. Within how many days the customer has to get the reply? Within 30 calendar days. If the customer does not get the reply within 30 calendar days, either from the credit information company or the credit institution, customer is eligible for a compensation of 100 rupees per day. Then who has to pay the compensation? Either the credit institution has to pay the compensation, or the credit information company has to pay the compensation. CIs, that is credit institutions, to send the corrected data to CICs within 21 calendar days from the date when CICs are informed of the inaccuracy of data, either by the customer or by the CIC. So through CPGRS, I am lodging a complaint to Canara Bank. I have not availed any loan, but my name is appearing as availed a loan from Canara Bank under CBIL. So I have the option to send the mail through CPGRS to Canara Bank, or I have sent to CBIL. Suppose if I directly sent it to Canara Bank within 21 days, Canara Bank has to inform the CIC whether it is correct or not. By chance, if I send it directly to CIC, immediately CIC has to forward to Canara Bank. So Canara Bank again has to inform the CIC within 21 days from the date of receipt of the complaint, either from the CIC or from the customer directly. The credit institution has to give the reply to CIC within 21 days. So now the CIC is having another 9 days to see everything and reply to the customer. The total 90 days, 30 days come. So if there is a delay on the part of the Canara Bank more than 21 days, or there is a delay on the part of the credit information company more than 9 days, so depending upon at whose end there was a delay, 100 rupees to be paid by them. Okay, so CIC is to update the corrected information in the remaining 9 calendar days. 9 calendar days. If the complaint is rejected, it has to be informed to the customer. Complaints to resolve within 30 calendar days. The date of resolution is the date when the CAR rectified is sent to compliant by the CAC or by postal email. Compensation to be credited within 5 working days of resolution of the complaint. So within 30 days, no compensation. Within 30, beyond 30 days, at whose part is the delay, the compensation to be credited to the customer's account within 5 working days of the resolution of the complaint. So this is what it is told with regard to the credit information company. So these things we should know. Then revision in the liquidity premium. You know, some of the term loans, liquidity premium is to be added to the interest rate. Not for all loans, some of the term loans only. There will be no which are all the loans for which liquidity premium has to be added. So there was a change in HO Circular 264 by 2025. This is the existing and this is the revised. So if the tenor of the loan is more than 1 year up to 2 years, the existing level was 0.10. Now it is revised to 0.20. For all new rupee loans repayable more than 1 year, wherever applicable, and sanctioned with effect from 1/4/2025. Revised from 0.15 to 0.25. In all other cases, there is no change. So they may give tick the odd man out with regard to revised liquidity premium as per HO Circular 264 by 2025, 7 years to more than 10 years, revised from 3.30 to 3.45. Anything they will give. That means I should know only in 2 slabs there is a change in the liquidity premium in the current year. What are they? More than 1 year to 2 years, then more than 2 years to 3 years, which is revised from 0.10 to 0.20 and 0.15 to 0.25. In all other cases, there is no change in the liquidity premium. Okay, sir. Now, there are certain changes has come in the risk weight. So questions are expected probably. So that is why, so 2-3 slides are there. Let us go through the slide. What is risk weight? What is risk weight? And who is giving the risk weight? And in the case of a rated account, that is what is a company account or individual accounts, etc. What is the risk weight? Who is giving the risk weight? Let us see quickly. 3-4 slides are there. Definitely expect for all scales questions will come because there is a change in the current year. What is risk weight? What's the importance of risk weight? In this slide I have given. Very simple. Yesterday night I made the slide. Commercial real estate. Do you know a bank's exposure asset? The bank's asset will be in various sectors: commercial real estate, retail sector, or UK commercial real estate, residential housing, or credit card exposure, or capital market exposure, regulatory retail. Like that, the asset portfolio of your bank is divided into various categories. Suppose let us assume the asset portfolio of your bank under commercial real estate, the exposure is 100 crores. Exposure means total outstanding. Exposure is 100 crores. Credit card. Total amount outstanding under credit card in a bank is 100 crores. Capital market exposure. What is capital market exposure? So, capital market exposure is nothing but loans given by banks against pledge of securities. Okay, pledge of, that is shares, debentures, etc. is called capital market exposure. So, what is capital market exposure? Loans given by banks against shares, debentures, etc. is called capital market exposure. There are 2 types of capital market exposure. So direct capital market, these questions may come. Direct capital market exposure and indirect capital market exposure. What do you mean by indirect capital market exposure? Loans given by banks against shares and debentures is called indirect capital market exposure. What do you mean by that is a direct capital market exposure? Investments made by banks. Banks can also make investments. Investments made by the banks in shares and debentures is called direct capital market exposure. Now, next question, one question periodically they are asking, what is the total capital market exposure of a bank in a year? So, how much a bank can give both direct and indirect put together? What is the maximum capital market exposure a bank can have? A total capital market exposure of a bank should not exceed 40%. Keep in mind, this number you keep in mind. Total capital market exposure of a bank should not exceed 40% of its net worth. 40% of its net worth as at the end of previous 31st March. So, for example, That is for the year, we are in 25-26. For the financial year 25-26, what should be the maximum capital market exposure of Canara Bank? What is capital market exposure? Direct, indirect, I already told you. So out of, we should see as of 31st March 2025, what is the net worth of Canara Bank? So on that net worth of Canara Bank, it should not exceed more than 40% for the financial year 25-26. That is a concept of capital market exposure. Okay, so because last year when discussing, I saw a question also 4 to 5. That is, I also discussed one question with regard to that is partly paid shares. What is the maximum loan that can be given by a bank against a partly paid share? There is for partly paid share, no loan can be given. So that question was there for your 4 to 5. Similarly, they may ask you, what is capital market exposure? What is the maximum capital
Sir,
market
slide
exposure?
move ஆகணும் sir.
Slide move ஆகலையா? இல்லையா, இதுதான் இருக்கேன். Okay, so I have not explained, so I have not made a presentation, I'm explaining now. So capital market exposure, regulatory data. Let's assume a bank's exposure or asset is like this, total outstanding. Total is 400. Now, there is a concept called CRAR. What is CRAR? Expand CRAR. Capital to risk-weighted asset ratio. The Basel committee, Basel norm. So the Basel norm says banks in India has to maintain 9% CRAR. So in colloquial language, the CRAR, we used to say it capital adequacy ratio. The capital adequacy ratio, the correct form as per Basel is capital to risk-weighted asset ratio. So the capital to risk-weighted ratio as per Basel, it is 8% all over the world. As per RBI, the CRAR should be 9%. The capital conservation buffer, another 2.5%, totally 11.5. So CRAR 9%, capital conservatory buffer is 2.5, totally 11.5. The banks are complied with. Now the question is, so what do you mean by CRAR? Capital to risk-weighted asset. Your asset is 400 crores. Asset is distributed, nothing but your advances is nothing, mainly your asset that is distributed in the balance sheet like this. So what is the risk weight? The risk weight is given by Reserve Bank of India. Who gives the risk weight? Risk weight is given by the Reserve Bank of India. For the capital market, sorry, for the that is the CRE exposure, the risk weight given by RBI is 100%. That is, if your asset is 100 crores, if the risk weight is 100, the risk weighted asset, that is asset multiplied by the risk weight, is the risk weighted asset 100, no problem. The credit card receivables, total outstanding under credit card, if the asset is 100, if the risk weight is 150, it is given by RBI, the risk weighted asset is 150. Then capital market exposure, 100 crores is the asset of the bank. The risk weight given by RBI is 125. So the risk weighted asset is 125. Regulatory retail, the risk weight is only 75. So even though the asset is 100, your risk weighted asset is only 75. The capital to not capital to asset, capital to risk weighted asset ratio. So what is the asset portfolio of the bank? What is the risk weight given by the bank? Then you will find out the risk weighted ratio, risk weighted asset. So even though your asset is 400 crores, your risk weighted asset is 450 because you have investments, your assets in high risk area. Which is the high risk area? Credit card 150%, capital market exposure 125%. So commercial real estate, so CRE, so under same. So only in retail you have 75%. So even though your asset is 400, your risk weighted is 450. That means bank has to keep a capital of 9% over and above the 2.5. Forget about the capital conservation buffer. So the bank has to keep a capital of 9% on that 450 crores and not on that 400 crores. So a risk weight is important. Lesser the risk weight, lesser the risk weighted asset, and lesser the capital. So when the risk weight will be less, if your investment, if you are making loans for certain sector where the risk is less, the risk weight will be automatically less. So understand the concept. Here what we got is a concept called risk weighted asset. Then CRAR expansion we have got. What is the present CRAR requirement of CRAR as per Basel 3 for banks in India? For RBI as per banks in India 9%. As per Basel it is only 8%. Along with that 2.5% is a capital conservation buffer. This risk-weighted asset ratio, CRAR, is not on total asset. It is on the total risk-weighted asset. This is only an explanation to you. Now we are going. Now, HO Circular 150/2025 and 151/2025. So, risk weight for certain categories of loans have been underwent a change. So risk weight, who gives the risk weight? Reserve Bank of India gives the risk weight in India as on date. For microfinance loans in the nature of consumer credit. So when you went for the last exam, it was 125%. Now it is reduced to 100% with effect from 25 to 2025. The bank's portfolio of the consumer finance loans in the nature of the microfinance loans in the nature of consumer credit will attract a risk weight of 100% in 125%. This number we should know. Microfinance loans not in the nature of the consumer credit. So when the people talk with you about the agriculture class or the government sponsored scheme, they will explain about the microfinance loans. Microfinance loans not in the nature of the consumer credit, which fulfill the 4 regulatory retail criteria as mentioned the circular 150/2025 continues to be at 75%. So if the microfinance loans fulfills the criteria of the regulatory retail, then the risk weight for those category of loans is only 75. Lesser the risk weight, lesser the capital bank has to keep, because the risk weighted asset will be less. Okay, keep in mind. So 151/20. So this talks about 150 talks about the risk weight for microfinance loans that is divided into 2 categories. One is which are in the nature of the consumer credit, reduced from 125% to 100%. Other consumer microfinance loans which are in the nature of the regulatory retail will attract a risk weight of 75%. These numbers please know. 151/2025 also with regard to risk weight. Loans to non-banking finance companies is expand NBFC, clerical to officer. No, expand NBFC. Loans to non-banking finance companies, both priority and non-priority, other than non-finance banking company, core investment company. So NBFC, deposit taking NBFC, or investment making NBFC, like the various classification are there. Let's not worry about it. So here, as regard the risk weight, we have to keep in mind 2 things: NBFCs and then NBFC core investment company. Okay, loans to NBFC. When a bank gives a loan to NBFC, what is the risk weight the bank has to keep for that loan, other than loans to core investment companies? Forget about core investment companies. Loans to NBFCs. So other than NBFC core investment company, what is the risk weight based on the ratings given by ECAI for corporates with effect from 1/4/2025? Keep in mind, if Canara Bank gives a loan to a NBFC, what is the risk weight the Canara Bank has to keep for the loan of that NBFC? So then that NBFC has to be risk rated by ECAI. So based on the risk rating given by the ECAI, for a company account also risk rating by ECAI. So the risk rating, the risk weight to be kept for that NBFC, the risk weight to be kept for the loan given to the NBFC depends upon the risk rating given by the ECAI. If you see the next slide, you will understand. You see. So let's go there. I will come there. I will come to that point there. See, for example, corporates. So NBFC, whether I have given here, loan to NBFC, other than core investment companies. Okay, loan to NBFC other than core investment companies. Risk weight, what risk weight we have to maintain for the loans given to the NBFCs is as per the ratings assigned by the rating agency. So there are 2 types of claims, 2 types of loans we are giving to the NBFCs. One is long-term claims, another is short-term claim. What is a long-term claim? What is a short-term claim? Claim means the loans given. What is a short-term loan and what is a long-term loan with regard to loans given to NBFCs? So the short-term claim means short-term loans to NBFCs means term loans repayable within 1 year. Term loans term loan repayable within 1 year is called a short-term loan or short-term claims on a NBFC. If the or that is long-term, what is a long-term claims or long-term loan for a NBFC? Long-term loan means all ODOCC and term loan repayable for more than 1 year. So the explanation with regard to that is loans to NBFCs from the risk weight point of view, loans for short-term claims or long-term claim. If it is short-term claim means what? Term loan repayable within 1 year. Long-term claim means what? Term loan repayable more than 1 year and also all OD, OCC accounts. Okay. So then what is a risk weight? If the HFC, for example, the NBFC maybe, so housing finance company, it's an NBFC. Loans given to, that is an housing finance company, if they are rated by the ECAI AAA, the risk weight is only 20%. Imagine, you are given a loan to a housing finance company, 100 crores. Okay, the housing finance company is risk weight is external risk rating. So AAA is highest risk rating, and highest risk rating they give you. Then that means 100 crores loan you are given. The risk weight is only 20%. Then the risk weighted asset is only 20. So for 100 crores loan, you need not loan given to HFC. You need not keep 9% capital. It is sufficient if you keep capital on 9 on the 20 crores only, because the risk weight is for a AAA rated housing NBFC, which is housing finance, is 20%. Similarly, AAA rating NBFC priority is 20%. AAA rating NBFC others is again 20% only. Earlier, before 1/4/2025, if it is a AAA rated NBFC others, then the risk weight was 45%. Now the risk weight is reduced to 20%. Then core investment companies, the risk weight is 100%. So loans to NBFCs other than core investment companies, risk weight is as per the ratings assigned by the rating agency, external credit assessment institution. So whenever these are all the NBFC, so it is divided into HEFC, then core investment company and other NBFC. So what is the risk weight? If it is AAA, in all the cases, it is 20% only, other than core investment company, 100. So in NBFC others, it was, if they ask you the question, why you have put in the rating case? So before 1/4/2025, last time when you went for the exam, this was the risk weight you have to keep for AAA rated NBFC others. So AA 30, 30, 30, everywhere from 55, it is reduced to 30 now, 100. A rated like that, from 75, it is reduced to 50. Everywhere it has become 50, 100. So like that. So what is the risk weight for an NBFC? It is related to the risk rating given by this. What is risk rating? To ECAI rating given by the external credit assessment institution. Based on that, based on the category of the NBFC, the risk weight undergoes a change. And there is a reduction in the risk rating from by that's 25 basis points in the NBFC others in all the three category, which was more than 20 plus 25% earlier, that has been brought down. Now you know what is a short-term claim and what is a long-term claim. With regard to short-term claim on the NBFC, when the credit institutions give you a credit information, that is, the credit institutions give the credit rating, no risk rating for the short-term loans, they will not give AAA, BBB, etc. They will give A plus, A1, A2 like that. So this is the risk weight. So I told you risk weight is important because the capital of your bank depends upon the risk-weighted asset and not on the total asset. So NBFCs other than core investment companies. So here for the NBFCs other than core investment companies having more than 100 crores exposure from the banking system rated earlier but subsequently unrated will attract a risk weight of 150% irrespective of all these things. A core, that is an NBFC which was rated earlier, exposure is more than 100 crores, rated earlier, now it is what is unrated, I already explained to you. If it is unrated, it will attract a risk weight of 150%. Unrated NBFCs other than core investment companies with more than 100 crore, 200 crores exposure from the banking system will attract a risk weight of 200%. Earlier rated, now unrated. Exposure more than 100 crores, so 150% risk rating. And credit information companies, which is not risk rated, they will attract, exposure is more than 200 crores, they will attract the risk weight of 200%. These are all the numbers we should know. In between, as other risk rating for the individual also we will see, sir. So if the question is asked, we should not leave it. So what we are seeing is a risk weight for microfinance loans, which are categorized as consumer credit, reduced. A risk weight for other microfinance loans, which are brought under the regulatory retail, continues to be 75. Loans to NBFCs, risk weight is related to whether it is short-term client or long-term client and depends upon what type of NBFC and what is the risk rating given by the external rating agency. Now for that is NBFC others, from 1/4/2025 for all the categories, it is reduced by 25 basis points, which was more before 1/4/2025. Then we saw what is a short-term claim, all term loans repayable within 1 year. What is a long-term claim, all ODOCC and term loans repayable more than 1 year. What is the thing we saw? Then NBFCs exposure 100 crores and above, which was rated earlier, now unrated, that is 150% is the risk weight. Then all NBFCs exposure of more than 200 crores, not rated at all, risk weight is 200%. Okay, now with regard to individual housing loan, LTV ratio and the loan quantum, that is depends on, gives the risk weight. For example, if the loan amount is up to 30 lakhs, and if the LTV ratio is less than or equal to 80%, the risk weight for that housing loan from 1/4/2023 is 35%. I want to discuss a question on LTV ratio. What is LTV ratio? LTV ratio means loan to value ratio. Okay, so what is the formula for LTV ratio? Loan to value ratio. Outstanding loan divided by the security value. Outstanding loan divided by the security value. If the security value is more, then the LTV ratio will be less. Am I correct, sir? Denominator. When the denominator is more, then the LTV ratio is less. I want to ask you a question, whether LTV ratio is more is good for the bank or less it is good for the bank. Always, if the LTV ratio is less, it is good for the bank, because LTV ratio less means the security value is more, the margin from the borrower is more. That means when the LTV ratio is less, the security value is more, the margin from the borrower is more, and it is less risk. Because it is less risk, the risk weight is also less. So you go to the housing loan up to 30 lakhs. If the LTV ratio is equal or less than 80%, the LTV ratio is equal to or less than 80%, lesser the LTV ratio, the risk weight is only 35%. That means the LTV ratio can be equal to or less than 80%. In such a case, lesser the LTV ratio, your risk weight will be 35%. For housing loans up to 30 lakhs, if the LTV ratio is more than 80 and less than or equal to 90, the risk weight is 50%. That means for housing loans up to 30 lakhs, that is your LTV ratio cannot be more than 90%. That means the minimum margin should be 10%. Okay, up to 30 lakhs, if the housing loan is up to 30 lakhs, and if the LTV ratio is more than 80%, less than or equal to 90%, you have to keep a risk weight of 50%. Why they have not kept a housing loan up to 30 lakhs, LTV ratio more than 90%? No. If the LTV ratio is more than 90%, you cannot sanction a loan, even the loan amount is up to 30 lakhs. So the loan amount is up to 30 lakhs, one divided they are given. If it is less than or equal to 80%, then the risk weight is 35%. Lesser the LTV ratio, it is good for the bank, less risk. So when it is like this, you have to give this risk weight of 50%. That means the borrower has to necessarily bring a minimum margin of 10%. Below that, there is no cost of any loan. At all point of time, the LTV ratio should be at least 90%. So for loan amounts above 30 lakhs up to 75 lakhs, the LTV ratio should necessarily be less than or equal to 80%. So that means the minimum margin should be at least 20%. It cannot come below 20%. For loan amount above 30 lakhs up to 75 lakhs, the risk weight is 35%. If the loan amount is above 75 lakhs, then the LTV ratio should be either equal to or less than 75. That means the minimum margin should be 25%. So LTV ratio is 75% means margin is 25%. So in that case, you have a risk weight of 50% to the borrower. The bank has to keep the risk weight. So with regard to individual housing loans to borrower, so the risk weight depends upon the loan quantum and the LTV ratio. That is why bank is insisting for this much loans, you have to necessarily maintain this much LTV ratio, because based on the LTV ratio, bank has to maintain the margin, that is risk weight. So this we have seen. Then individuals. Commercial real estate exposure 100%. Commercial real estate, residential housing, 75%. What do you mean by commercial real estate exposure? Commercial real estate, 100%. Loans given to big cinema malls, etc., 100%. Commercial residential housing. What do you mean by residential housing, sir? CRE, residential housing. CRE, residential housing is not the second unit, third unit housing loan we are giving. That is not the criteria. CRE, residential housing mean loans given to builders who are constructing, that is dwellings, who are constructing various flats which are to be sold, which are not for captive purpose. That is called commercial real estate residential housing. So commercial real estate residential housing mean loans given to builders who are constructing various plots or houses for not for captive purpose but for dwelling purpose, which will be sold to various individuals. So those type of loans will attract a risk weight of 75% only. Lesser the risk weight, it is good for the bank. Capital market exposure. What is capital market exposure? I already explained, 125%. Venture capital exposure, 150%. Consumer credit, that is personal loans, excluding credit card, housing loan, vehicle loan, gold loan, and educational loan. Consumer credit loans. So other than credit card, so personal loans given, you are giving Canara budget, Canara pension, etc. No, that attracts a risk weight of 125%. If you give 100 crores loan under Canara budget, you have to keep 125% capital for that. 125 crores cap, 9% capital on 125 crores, not on 100 crores. Credit card receivable outstanding under credit card attracts a risk weight of 150%. Educational loan, 75%. Vehicle loan attracts a risk weight of, that is 100%. Gold loan attracts a risk weight of 125%. Then regulatory retail attracts a risk weight of 75%. All those things are available in the credit risk management policy 215/2025. So gold loan, imagine for 100 crores gold loan portfolio, we have to keep a risk weight of 125%. Regulatory retail. What is regulatory retail? Regulatory retail includes individual segment and small business turnover up to 50 crores, exposure up to 7.5 crores is called regulatory retail. So that is why bank is insisting on various types of small loans. 75% capital only is required for that. Okay, sir. So we have seen NBFC. What is the risk weight to be given based on the risk rating assigned by the external credit assessment institution. Similarly, for corporates also, based by external risk rating assessment institutions given by the risk rating. So based on the risk rating given by them, we will keep the risk weight. For corporates also, we will keep like that. Okay, so we should know. So that is my corporate is rated AAA. We give loan to them. It is 100 crores loan to them. It is sufficient. We keep capital only 20 crores for them. Then what the corporates will demand for us? They will demand very lesser rate of interest. Okay, so this is with regard to rating and the risk weight for corporate. Okay, then sir, NBFC we saw this also the staff loan. Whether we have to keep risk weight for the staff loan also, or for staff loan no risk weight is required. No, for staff loan also we have to keep risk weight. That we have to keep capital. What is the capital we have to keep for the staff loan? If the staff loan portfolio fully covered by the superannuation benefits or collateral of a residential property, Canara mortgage can be given to the staff members. Housing loan can be given to the staff members. Okay, so when the loans given by the staff members is fully covered by the superannuation benefits or collateral of the residential property is taken, then the risk weight for those staff loans portfolio is only 20%. Is only 20%. On the other hand, sorry, it is 20%. For all other types of staff loans, the risk weight bank has to keep is 75%. Then, if it is loans directly given to central government, or if the loan is guaranteed by state government, then the risk weight is 0%. If the loans are directly given to the state governments and made in the state government investments, the risk weight is 0%. You need not keep any capital. If the loans are guaranteed by state government, if the loans are guaranteed by central government, risk weight is 0%. If the loans are guaranteed by state government, the risk weight is 20%. Loans guaranteed by the state government will attract a risk weight of 20%, whereas the loans guaranteed by the central government will attract a risk weight of 0%. Loans given to state government will attract a risk weight of 20%. Loans given to state government will attract a risk weight of 20%. Claims on RBI, DACGC, CGTMSE covered accounts, etc., will attract a risk weight of 0%, whereas that is covered by ECGC will attract a risk weight of 20%. For example, a loan is given, it is covered by CGTMSE, 100% loan is covered under CGTMSE, risk weight is 0, you need not keep any capital. On the other hand, 80% is the CGTMSE, 20% is the not CGTMSE by collateral. For the 20%, we have to keep, that is whatever the portfolio, we have to keep the risk weight, we have to keep the capital. In the case of claims, whenever loans are guaranteed by ECGC, for the guaranteed portion, we have to keep 20% as the risk weight. So this is with regard to risk weight. So that is okay. This we already seen, nothing to worry. So I expect a question in the risk weight. Please go through. So as Mr. Ravi Kumar was telling on the day, that is, these are all the points I expected from the circular. I have made it just, and if time permits, go through the circular once at this particular paragraph, particular chapter with regard to risk weight. You'll get more clarity. Okay, sir. Then service charges for credit related items. The last bank circular on credit service charges for the credit related items is 826/2024. Academic interest, I have given that circular also. From there only we got two modifications. 125/2025, it is a fresh guideline. The guideline was not there in 826/2024. Bank issued a fresh guideline. So that what is the service charges for delinking or relinking or replacing the term deposit held as margin for LC. So rupees 100 rupees per transaction, that is delinking and relinking for replacing the term deposit held as margin for LCs and guarantees during the tenure of the LC guarantee to be collected with effect on 1/4/2025. Is exchanging the deposit for given as the for LCs or guarantees as the whatever lien or something is marked, we are going to change it every time. We are going to charge 100 rupees. Third party deposit taken as margin cannot be replaced. So margin taken only from the depositor for the guarantees or for the LCs and guarantees for the same deposits given by them for their own deposit, it can be replaced with a charge of 100 rupees plus GST each occasion. And third party deposit taken as margin for a LC or guarantee cannot be replaced during the tenure of the LC or guarantee. Then 556/2025, revision in the existing service charges for cancellation of bank's lien on government securities. So you have taken an NSC, you have made a lien with the post office, and the loan is given, or LIC policies are taken based on the surrender value loans are given. So the liens have to be cancelled. So that is we have to pay service charges. The customers we have to collect rupees 250 per instrument plus OPE, out of pocket expenses. The existing guideline is rupees 100 per instrument plus OPE. So if it is done within a certain period, within 1 month of the closure of the loan, if it is done, so this is the charges to be paid. And if it is done more than 1 month, additional rupees 100 per instrument per month or part thereof to be collected. Okay, then so here there is one change that I have not explained in detail about the GST, Canara GST, because MSME people will handle the class. The change only I have been telling here. 543/2023 is a base circular for Canara GST. In 564/2025, there is a modification. For financing working, what is the Canara GST? For financing working capital requirement of GST registered MSME borrowers against collateral securities of immovable properties and or other approved collateral, including our bank deposits. So we are not taking a stock and other things, etc. We are taking collateral as the immovable properties or other approved collateral, including our bank deposits. When we give loan, that is explained in Canara GST. So earlier, so that is the periodicity of submission of stock statement for that loan or book debt statement for that loan is made quarterly. Earlier it was half yearly. So existing guideline is half yearly. From 1/10/2025, it has been made as quarterly. regularly. So that is with regard to submission of stock statement or book debt statement for Canara GST, which is made earlier, which was once in 6 months, now made modified to once in 3 months with effect from 1/10/2025 in the coming days. Okay, that is what 564/2025. Then Canara Startup, the earlier circular 76/2023, 564/2023, then other circulars 836 and 532. So these are all the circulars. The people who are going to handle MSME, I will be talking to you about that, but I have given only the changes here. Canara Credit Guarantee Scheme for Startup called as CGSS. CGSS. So 544/2025 modification has come on CGSS. Guarantee cover limit enhanced from rupees 10 crores to 20 crores. Now you know, no? So you know that is the guarantee cover is available other than this, no normal MSE loans 10 crores. Earlier it was 2 crores, enhanced to 5 crores. Now it is 10 crores. Similarly here, guarantee cover limit for CGSS for startups increased from 10 crores to 20 crores. The trust will provide guarantee cover to the extent of 80% of the amount in default for loan amount up to 10 crores. Okay, guarantee cover increase from 10 crores to 20 crores. There, how much guarantee cover the trust will give? So the 85% of the amount in default up to the loan amount of 100 crores, and they will give only 75% of the amount in default for loan amount above 10 crores. So guarantee cover increase from 10 to 20, and then how much guarantee cover is available? Up to 10 crores, 85%. Above 10 crores, 75% is the guarantee cover is available. What do you mean the amount in default? Liability as on the date of NPA or on the date of preferring the client, whichever is less. That is called the amount in default. Okay, revised guarantee fee is also announced by for them startups, women entrepreneurs and units in Northeastern region 1.50. For units from 27 champion sector, for units from 27 champion sector. So we should know how many that is units are there in the champion sector for CGSS. So we should know 27 units from the 20 for units in the 27 champion sector. 1% is the that is a fee, guarantee fee to be payable. For all others, it is 22%. So guarantee fee is on the amount outstanding in respect of term loan and or sanctioned amount for working capital and NFB limits. So lock-in period is 12 months from the date of commencement of the guarantee cover for preferring the client. Okay, so this is you leave it over there. So that this guarantee covers a percentage, etc. You can go through. Then what is a champion sector? Now that is an important thing as compared to all other things. What is a champion sector? Sorry. Champion sector, 27 sectors identified by the Ministry of Commerce, Industry, and Ministry of Commerce and Industry under Make in India. So that is 27 sectors are identified by the Ministry of Commerce and Industry under the Make in India. They are the champion sector. So for those things, the cover for the startup is percentage of premium is only 1%. Out of the 25, 15 are in the manufacturing sector and 12 are in, out of 25. I made it 25 out of 27. It should be 27. Out of the 27, 15 are in the manufacturing sector and 12 are in the service sector. So if they ask the question, you should, that's why I'm coming to the champion sector. So what is the champion sector? How many champion sectors are there? For what is the CGTMSC cover? Sorry, premium, that is for the startup, only 1%, others 2%, etc. We have seen. How many in the manufacturing? How many in the service sector? So that is why I have given the split up. Certainly, so questions will be going on in various. If you see the question paper, no, some questions will be easy, some questions will be tough, some questions will be confusing, some questions you know the answer, but we are not able to tick which is the correct answer. Suddenly they will put champion sector. Out of the 27 champion sectors, how many are in the manufacturing sector as per HO circular, so and so are the Make in India? We should know it should be 15 and 12. That's why I put it. If it comes, the question comes, no, we should not miss it out. So I felt these points are important from that circular. So as Mr. Ravi Kumar has told, if time permits, go through the circular. You may get some more points also. That will make you to the topper in the exam. Okay, sir. And now SSG service charges. So there is little confusion with regard to service charges. Bank has clarified to all the people in HO Circular 536/2025. Processing charges waived for loans up to 5 lakhs for the group. processing charges waived for loan up to 5 lakhs for the group. For the loan above 5 lakhs for the group, working capital above 5 lakhs up to 10 lakhs, the processing charge is 0.5% and above 10 lakhs 0.2%. So explanation I will give you some example, you will understand. Processing charges waived for self-help groups for the loan amount up to 5 lakhs for the group. For loan amount about 5 lakhs for the group, working capital above 5 lakhs up to 10 lakhs 0.15% and above 10 lakhs 0.2%. Term loan above 5 lakhs straight away 0.25. So processing charges for self-help group and joint liability group. Up to 5 lakhs per group it is waived. Above 5 lakhs you have to see whether it's working capital or term loan. If it is working capital above 5 lakhs up to 10 lakhs 0.15%, above 10 lakhs is 0.20. Term loan above 5 lakhs 0.25. Charges to be collected from individual SHG. How much? Because SHG means a group, no? You have to collect charges from the individual members. Then only you have to pay. So, charges to be collected only if the loan availed by a member is above 50,000. So, for the group, it may come to 5 lakhs. But for an individual, so for the group, it may come to 6 lakhs. Let's assume above 5 lakhs only for a group you will charge. For a group, it may come to 6 lakhs. But some of the SHGs will avail the loan below 50,000. Some of the SHGs have availed the loan above 50,000. So the charges, how much proportionately to be collected by the individual SHG depends upon individual members, depends upon the loan availed by them. Availed by them. The charges to be collected only if the loan availed by a member is above 50,000. Branches to capture the individual member details in fast path SIM 22. Clerical officer, you should know all these fast path. If they ask you, no, you should not miss it out. So the branches to capture individual members details in fast path SIM 22 and individual member loan wise details in BA010 option to avoid compliance income leakage, because only if you upload all those things, system will deduct the charges correctly. Otherwise, inspectors will find out the income leakage. Okay, I'll give an example. If SHG group of 20 members, availed a loan of rupees 10 lakhs and each member availed 50,000. I told you SHG above 5 lakhs, though that is processing charge to be collected. Not only that, you should see the individual members, how much they avail the loan. See, that is SHG group, 20 members availed a loan of 10 lakhs and total loan available by the SHG group is 10 lakhs. Oh, above 5 lakhs, we thought loan processing charge would be collected. But you see here, if SHG group of 20 members availed a loan of 10 lakhs and each member availed 50,000 only. So that is 50,000 into 20, all individual member 50,000 and total availed by the SHG is 10 lakhs. Then processing charges is not to be collected from that SHG group. So because we should see not only the loan given to the group, and we should also see what is the individual member's loan. So above 5 lakhs to be collected, but on the other hand, if individual member availed only above 50,000, then for them only we have to collect. A SHG group of 20 members availed a loan of rupees 10 lakhs and 15 members. So they totally, SHG group is 20 members and total loan availed by them is 10 lakhs. And 15 members availed 40,000 each and the remaining 5 members availed 80,000 each. Okay, so that is 15 members availed 40,000, 15 into 46 lakhs, and remaining 5 members availed 80,000 each. So 5 into 80, it comes to 4 lakhs. Here it comes to 6 lakhs. Here it comes to 4 lakhs. Two groups of people for the total availed by 10 lakhs. Processing charges are waived for 6 lakhs and proportionate service charges to be collected for 4 lakhs for the group as. See, you see how much they have collected, sir. So here you see individual member has availed, this fellow has availed less than 50,000. So 15 into 40, 6 lakhs. So 6 lakhs, even though it is more than 5 lakhs, we will not collect service charge because individual member has availed only 40,000. So then what is the balance available? Others 5 members has availed 80,000. So for that 4 lakhs only, for that 5 members only who has availed 80,000 each, we have to collect service charges. Processing charges are waived for 6 lakhs because each availed only 40,000. And preparation service charges to be collected for 4 lakhs for the group. That is for 4 lakhs, if it is whatever types of loan, let us assume 0.15% is the service charge to be collected. So 600 plus GST for working capital, because up to working capital up above 5 lakhs up to 10 lakhs 0.15%. So for 4 lakhs for the group is 0.15%, because individually everybody has availed above 50,000. Even though for this group it is coming only 4 lakhs. So individuals, they availed above 80,000. So what is the total amount availed? Total amount 10 lakhs. To fix this 0.15%, you have to see what is the total amount availed by the group. So proportionately, you have to collect for 4 lakhs 0.15%. 600 plus GST for working capital, and group as a whole 10 lakhs. So for above 5 lakhs, term loan is 0.25%. Group as a whole has availed 10 lakhs, but for the entire 10 lakhs, you cannot collect the 0.25. Each member has availed, whoever it is above 50,000 only. For this 4 lakhs, you have to collect 0.25% plus GST for the term loan. So this is the way we have to collect, that is service charges for the SSG and GLC. So this is the example given in the circular also. This is the HO circular 536/2025. So these are all the points. If they ask at various levels, you should be able to explain. That is why it is told in fast path SIM 22 and BA0116, these details to be updated. If these details are updated, system will collect correctly. If these details are not updated at the user level at the branch, system will not collect properly. It may be excess collection or short collection, subject to audit. Okay, sir? Okay, sir. So this is the thing I have for you here. We will go to the question paper, sir. Mr. Anandakrishnan? Whether the PDF file is visible?
No, question paper now it is okay.
Okay,
Sir,
visible now?
Sir, visible, sir. Sir, or 5 minutes break would people are asking.
Okay, okay. I don't want break.
But they want.
Okay. Okay, sir. Question number 18 we have seen, wherein whenever the risk rating of a borrower is downgraded, the concession interest rate can be permitted. So it should not be automatically given. As per HO Circular 149/2025, circulate the CAC and above authorities on a case-to-case basis has to permit it up to the delegated powers. So for question number 18, the question number 18 answer is C. Circulate the CAC and above authorities. Okay. Question number 19. Oracle Business Intelligence Report 271025 and 271025A. So for clerical officer people who are attending, you should know the business intelligence reports and you should know the fast path options, etc. That is why I brought this one also for others who is taking the exam. The other point they should take care. Or introduce HO Circular 400/2025. The report contains loans sanctioned by different officiating persons in the absence of the branch in charge. No. Loans disbursed in the absence of the branch in charge? No. Loans sanctioned by higher authority, though it falls under the lower authority and lower authority is present? No. Gold loans closed within a month of disbursement? Yes. So question number 19, answer is D. business intelligence report, a pre-filled format. One more point in that circular is it has to be sent to the RO before 7th of the succeeding month. So that question, that point also asked also, don't miss it out. So this report has to be generated by branches at the end of the month, pre-filled format, check and send it to the RO before the end of the succeeding month. Okay. So question number 19, answer is D. Answer is D. Question number 20. As per HO Circular 821/2024, a register has been introduced for gold loans called gold packets inward and outward register. There we saw in the presentation what is the purpose of the register, and then when the balancing to be taken, what is the last point to be, last pages to be checked and written, etc. Gold loan balancing monthly, all the last Friday and all we have seen. As for HO Circular 821/2024, a register has been introduced for gold loan called gold packets inward and outward register. What is the number of that register? NB 191. Question number 20. Suddenly, these are simple questions will come. So we thought that they will not ask us the register. Suddenly, the examiner will ask. So question number 20, answer is NB. No, it should be NB. NF I have made NB 191. So question number 20, answer is B. Question number 20, no. What is the number of this register? Yes, NB 191. It is available, sir. Question number answer is E. Because NF 191 I have given here. Question number 20. So answer is E. NB new book NB 191. So question number 20. Answer is E. Question number 21. As per HO Circular 2/2025, a 17-digit gold loan sequence number to be recorded in NF 497, NF 1075, NF 367, NB 191. So we have seen what is the 17-digit gold number. So that where we can see that 17-digit gold loan sequence number, in which fast path we can see, in business intelligence report we can see, and while sanctioning the loan, where we have to enter all those things we have seen, and for the retail loan also we have seen, where all we have seen it, isn't it? So those questions, 17-digit, first 5 digits represents what, second, etc. So that circular is very important. 2/2025, go through it. So that is, it has to be recorded back 1 to 4, 4 only, option C 1 only, D none of this. It has to be recorded in all the 4. So 1, 2, 3, 4. Answer is A. As per HO Circular 2/2025, 17-digit gold loan sequence number to be recorded in 1 to 4. That is answer is A. Question number 21. Answer is A. Question number 22. In HO Circular 1896/2024 pre-release audit, which one does not find a place? For all exposure of 2 crores and above, yes, it has to be done. For all renewals with enhancement, pre-release audit to be carried out when the aggregate sanctioned exposure becomes 2 crores and above, yes. For all ad hoc credit limits, additional credit facilities sanctioned to the existing borrower for a specified period in which documentation is obtained, the exposure becomes 2 crores and above, yes. So none of these, all of these. So which does not find their place. So answer is none of these. None of these does not find it. No. So yes, none of, no, but wait, sir, HO Circular, which does not find a place. So none of these, all of these. So all of these does not find a place. No, none of these does not find a place. That means all of these find a place. So you see, English also very important. Which one does not find a place? None of these. So none of these means what? None of these does not find a place. That means none of these does not, two negative. None of these does not find a place means all of them find a place. You see the other one, all of these. Which one does not find a place? All of these. No, all of them find a place. So that means your answer should be none of these. None of these does not, you have to read the answer with that question. None of these does not find a place. None of these does not find a place. All of them find a place. So answer is D. Question number 23. So with regard to pre-release audit, we have seen it was a modification as compared to previous exam. 2 crores and above exposure. Earlier it was 3 crores and above. Less than 2 crores, we have supplementary LS are introduced this year. And then that is within 48 hours, circle has to complete, and then branch has to get the closure report. And who has to do this one? Scale 1, scale 2, scale 3, and scale 4. What is the exposure? So all those things we have seen. Questions may come. Okay. Then as per HO Circular 258/2025, now we are seeing question number 23. As per HO Circular 258/2025, all credit proposals of close relative other than agriculture retail loan of individual borrowers, proprietor in the case of a proprietorship firm and partnership firms where any of the partners are close relatives shall be placed before the next higher authority for sanction. This is not applicable to accounts falling under the delegated power of RO circulated CAC and above authorities. So we have seen individuals, so then proprietorship, then we have seen the tabulation column, and we have seen who is the relative and who is the close relative. Close relative loans, if the existing borrower is having a business loan and close relative wants a business loan, even though it falls under the respective sanctioning authority, it has to go to the next higher authority. That is applicable for individual loans and is close relative. The proprietorship is having a loan and is close relative of the proprietor is asking a loan. A partnership firm is having a loan and the close relative of the one of the partners is asking a loan. In all these cases, that is applicable. It is not, in such cases, also it is not applicable if the loan falls under the power of circular CAC and above authorities. That is a recent change, HO Circular 258/2025. Question number 23, answer is E. Question number 24. As per Circular 8/2025, when the borrower submits a loan application the same day, it has to be entered in labs on the same day and system generates a OTP and delivers to the registered mobile number of the borrower and the same to be validated in labs to process the application. This is not applicable for which loan? Retail loans? No, not correct. Priority loans? Not correct. MSME loans? Not correct. Agricultural loans? Not correct. Educational loan. So we saw in that PowerPoint presentation, it is not applicable for gold loans and educational loan. Your answer should be, for question number 24, your answer should be E. What is E? E is 5. E, what is 5? 5 is educational loan. So gold loan and education loan, but here the option gold loan is not there. The option education loan is there. You have to choose the nearest option, correct option. For question number 24, answer is 5. Answer 5 is given in ABC form. So answer is E. Question number 24, answer is E. Question number 24, yes, answer is E. Question number 25. Then what is a maximum gold loan that can be sanctioned to a borrower for farm development purpose under agriculture? You know, sir, for maximum loan under agriculture gold loan, 35 lakhs. Maximum loan under agriculture is 35 lakhs. So the maximum for crop cultivation, 10 lakhs. So either you give 10 lakhs for crop cultivation and balance 25 lakhs under farm development, or entire 35 lakhs you can give maximum farm development. Crop loan, you cannot give maximum 35 lakhs. So total agricultural gold loan is 35 lakhs, out of which crop loan maximum limit is fixed. For crop loan only maximum limit is fixed. For crop loan 10 lakhs only is given. For any other agricultural development loan, you can give, if the borrower is not availing crop loan for crop purpose, you can give the 35 lakhs. Okay, no limit for the agricultural development loan. Overall 35 lakhs you can give. And I also told you, irrespective of the quantum of the agricultural gold loan, as per HO Circular 528/2025, the land documents proof has to be uploaded. There is no question of waiver of obtention of land document up to 1 lakh, up to 3 and all is dispensed with. So no question of declaration, etc. For as per 528, you have to obtain and upload. Okay, sir. Then, so the answer is, what is a maximum gold loan that can be sanctioned to a borrower for farm development purpose under agriculture? Answer is B. Question number 25, answer is B, 35 lakhs. If it is answered crop cultivation, it is only 10 lakhs. What is the preferential interest rate that can be paid to domestic term deposit of your spouse of your deceased employee, and the spouse is a senior citizen, is as per HO Circular 92. That is 92/2024 is the people eligible for preferential rate of interest. So as I told you, the spouse, irrespective of spouse, can open only when the employee is deceased or the ex-employee is deceased in her name or in his name. So the spouse, irrespective of her age, is eligible only 1% additional interest. Question number 26, answer is A. The spouse, because she is a senior citizen or he is a senior citizen, we cannot give 1.5%. That 1.5% is available only if the ex-employee senior citizen is alive. Okay, sir. Answer for question number 26, answer is A. Then Question number 27. Which is the odd man out in respect of loans to depositors against a domestic deposit in their names? Loan amount above 2 crores, interest is 1% above the deposit rate. For scale 3, the delegated power to sanction loans to depositors against the domestic term deposits 90% of the deposit amount. For loans against NRE, FCNR deposit, the margin is 25%. For staff members, for loan amount of more than 10 lakhs against the deposit term, against the domestic term deposit, interest is 2% above the deposit rate, none of this, which is the odd man out. You know, that is here, all the points are correct, but for point number B. 3. Point number B. For scale 3, the delegated power to sanction loans to depositors against a domestic term deposit is 90% of the deposit amount or maximum 75 lakhs, whichever is less. Okay, so the point number 2, only halfway it is stopped. Point number B, so that is the odd man out. Question number 27, answer is B. So either 90% of the deposit amount or the maximum delegated power given to the scale 3 is 75 lakhs, whichever is less. If it is minus deposit, it will become 3 lakhs only. So you should know the table. 258 bar 2025. Then question number 28. Question number 28 we are seeing. Acumen Business Consultancy Private Limited, Informix Analytics and Research Private Limited, CRI Solutions Private Limited, and B2K Analytical Private Limited are known as ECAI, CACs, Resolution Agent, Surface Valuers, none of these. Answer for the question is none of these. Who are they? They are external due diligence agencies. Question number 28, answer is C. They are not these things. They are external due diligence agency. I told you there are 4 external due diligence agency. To what type of due diligence you'll ask them to do? You'll ask them to do when the MSME borrowers first time approaching the bank for a loan, which is to be covered under CGT MSE, or for any other MSME borrowers as delivered with sanctioning authority. So we can go give the job to the external due diligence agency. Within 3 days, they have to give the report, or within then you can pay 100% fees. 3 to 7 days, 50% fees. More than 70 days, you cannot 7 days, you cannot pay any fees to them. Okay, that slide we have seen, and recently added also we have seen with regard to the external due diligence EDDSA software only. You have to ask for the report. And fees to be paid, the fee schedule I have told you. What is the validity period up to which it is renewal has been done, that also I have shown you. Please go through it. Then, so for question number 28, answer is E. Question number 28, answer is E. If it is none of these, you should know the correct answer. The answer is external due diligence agencies. Question number 29. As per HO Circular 72 by 2025, which authority can relax the collateral conditions for loans to stressed sector, both for existing customers and new customers? I told you new customer means what? For availing loan from Canara Bank for the first time. What is the collateral? They have to bring 100%. In what form they have to bring? Approved securities or collateral in 100% of the loan amount they have bring. So who is that is first time they are availing loan. So existing borrowers already they have some loan, or stressed sector loan they have. So the collateral is up to more than 100%. So with the new enhancement, so if the total collateral comes to 100%, respective sanctioning authorities can sanction. So they are having less than 100%. For the new additional enhancement, if they bring 100%, then respective sanctioning authority can sanction. So if they have less than 100%, and the new also, that is they are not able to bring 90%, it comes the next higher authority, it has to be sent to the next higher authority. We have seen all those things with regard to stressed sector risk management big website. The stressed sector details are that we already seen. Again, recollect what we have seen in the PowerPoint presentation. So then who has to, that is additional collateral and all we have told, and who can waive the additional collateral, etc. That is as per HO Circular 20, that is this circular. CGM, GM, HOCs in the above authorities can relax collateral conditions for loans to stressed sector, both for the existing customers and new customers. We saw it is CGM, GM, HOCAC and the above authorities. Question number 29, answer is E. Question number 30. If compliance by customers addressed addressed either to the credit institution. What is CA? So expand, clerical officer, questions from expand, CA, credit institution, CAC, credit institution company. So questions will come. That is why I given the expansion also in my question paper. Thoroughly go through with lot of difficulties, with lot of pains, I have prepared the questions. If complaints by customers address either to credit institutions or to credit information companies, so I always put the expansion first, and within bracket I will put the abbreviation. That is the way in which we have to present the questions. Are not resolved within 30 calendar days from the date of initial filing of complaint, either with the CA. Since I have given the expansion here, I have given the abbreviation here. Either with the CAs or CICs, the compensation of rupees 100 per calendar day to be paid to the customers. 21 days time is given to the CIs and 9 days time is given to the CIC. So whomsoever delays, and the compensation of 100 rupees per day has to be given accordingly, proportionately they have to take it, they have to give to the customer. Within how many days the compensation to be given? Within 5 days of resolving the complaint. So more than 30 days. Let's assume on 35th day they resolve the complaint. So 5 days penalty has to give me 500. That 500 penalty to be given within 5 days of resolving the complaint. Okay, sir. Then so answer is rupees 100 per calendar day. Question number 30, answer is 100. Question number 31. For certain loans repayable beyond 1 year, liquidity premium to be added along with the applicable interest. As per HO Circular 264/2025, what is the minimum and maximum liquidity period with effect from 1/4/2025? See how the question has been framed now. So, the minimum liquidity period is 0.20. Earlier it was 0.15. The minimum for the first 2 years, 2 slabs, it has become 0.20, and the maximum continues to be 0.45. Answer for the question is 0.20% and 0.45%. 0.20% and 0.45%. So any questions will come, sir. Then question number 32. Question number 32, mostly I think we are winding up. We will take up another question paper. Question number 32. Which of the following, question number 32, we are seeing, which one of the following does not match with regard to risk weight? I told you, risk weight. That is question number 32. Okay, question number 32. See, risk weight, very important. The 4 slides which I told you, you should be thorough with the slides. For example, microfinance institution, first is for which are in the form of that is consumer credit, reduced from 125% to 1%. Retail, regulatory retail continues to be 75%. Then I told you about NBFC. Under NBFC, varieties of NBFC and the external rating given, and then what is the change in the current year from 1/4/2025 I told you. Then short-term claims I told you, long-term claims I told you, what is short-term and what is long-term. Then individual housing loans up to 30 lakhs, above 30 lakhs, up to some, depending upon the LTV ratio. Higher the LTV ratio, then lower the LTV ratio, it is good for the bank, because LTV ratio means loan quantum divided by the security. If the LTV ratio is less, that means margin from the borrower is more, denominator is high, security value is high, it is good for the bank. Risk weight, what is the risk weighted asset? I gave a slide example. So now based on that, one question I have made combining all the slides. Which one of the following does not match with regard to the risk weight? Question number 32. Core investment companies 100%. Yes, core investment companies, if you see the slide, it is only 100%. Long-term claims of housing finance companies rated BBB, risk weight is 100%. Unrated NBFCs other than core investment companies with more than 200 crores exposure from the banking system, risk weight is 150%. Credit card receivables 150%. LTV ratio is less than equal to 80%. So, and the assigned risk weight for housing loan sanction on or after 1/4/2023, and the loan quantum should be more than 30 lakhs up to 75 lakhs. So, which one does not match? You see, now, what is the point number A? Core investment companies 100% correct. What is B? Long-term claims of housing finance companies rated BBB, risk weight 100%. That is also correct. Point number C. Unrated NBFCs, other than core investment companies with more than 200% exposure from banking system, risk weight is 200%. Risk weight here is 200%. I have mentioned as 100. So, so I have mentioned is 150. So C is not correct. So what is D? The credit card receivables 150. Correct. LT. So you see this point you see. If LTV ratio is less than or equal to 80%, okay, if the LTV ratio is less than or equal to 80% and assigned risk weight for a housing loan sanctioned after 1/4/2023, the loan quantum should be more than 30 lakhs up to 75 lakhs. Whether that is correct, sir? So I have a doubt here. If the LTV ratio is less than or equal to 80%, and assigned risk weight assigned for a housing loan sanctioned on or after 1/4/2023, the loan quantum should be more than 30 lakhs up to 75 lakhs. Is it correct? No. So if the LTV ratio is less than or 80% and the assigned risk weight, sir, assigned risk weight is, let us assume assigned risk weight is 35%. One point has to come here. That's what I'm reading again. You change the point like that. If the LTV ratio is less than or equal to 80%, and assigned risk weight for that housing loan sanctioned on 1/4/2023 and the assigned risk weight is 35%, loan quantum should be more than 30 lakhs up to 75 lakhs. No, the loan quantum should be up to 30 lakhs, isn't it? We saw individual housing loan. Individual housing loan up to 30 lakhs. If the LTV ratio is less than or equal to 80%, the risk weight is 35%. Okay, so here what they are given, LTV ratio they are given. Risk weight also you please take as 35%. So the assigned risk weight for a housing loan, LTV ratio less than or equal to 80%. That is assigned risk weight is 35% means what is the quantum of the housing loan? The housing loan is up to 30 lakhs. If it is up to 30 lakhs, if the assigned risk weight is more than 80%, less than equal to 90%, the risk weight should be 50%. So that type of questions will come for the housing loan, individual housing loan. Here, so both C is not correct as well as D, that is as well as what is the last one, sir? Last one is E. Both C and E are not correct. Go through the PowerPoint presentation. If I am not correct, you put me a text. I am available in WhatsApp. Okay, sir. According to me, which following does not match? C does not match and E does not match. Here under E and assigned the risk weight, you have to take it as 35%. And include that 35%. In that case, both C and D, E and become, that is not correct. Question number 33. If a self-help group of 10 members availed a loan of rupees 10 lakhs and each member availed 1 lakh, okay, how much it comes? 10 lakhs for term loan. What is the processing charges to be collected from the group? Here you have to see both what is the quantum of loan to the group and also you should see what is the quantum to the individual member. For the group, if it is above 5 lakhs, you have to collect. For working capital, above 5 lakhs up to 10 lakhs, 0.15. Above 10 lakhs, you will collect 0.25. For term loan, that is above 5 lakhs, straight away you will collect 0.25. Now here you see. So self-help group 10 members, total loan is given 10 lakhs. But for what purpose it is given? Term loan. Term loan means 0.25% above 10 lakhs. Individually, how much they availed? Individually also. So individually, how much they availed? Individually, they availed above 50,000, 1 lakh. That means straight away for the 10 lakhs, 0.25% is the processing charges to be collected from the group. Members have to share it accordingly. So here individually also it is more than 50,000, group also above 5 lakhs. So both that means all members have to pay. So for the entire 10 lakhs, you have to collect, since it is a term loan, for term loan above 5 lakhs, it is 0.25% straight away on the 10 lakhs. This is the answer for the question answer should be 10 lakhs into 0.25%. That is 2,500 plus GST. So 2,000 answer should be 2,500 plus GST. I have given 2-3 examples in the PowerPoint presentation also. Okay, so now Now we are going to, that is another question. Shall we run another half an hour? This is not to be seen. Let's see whether that I am able to get that presentation. I'm not able to get it.
Sir?
Are you able to see my screen?
Yes, sir. PDF.
Okay, 1 minute. MCQ general.
But I am seeing இதுக்கு முன்னாடி இந்த PDF, sir. MCQ.
Okay, 1 minute. It suddenly shows you are passing. Again, there is no interpretation. Because another half an hour, can we run?
Yeah.
1 minute.
MCQ general.
இதுதானா? இதான். போக மாட்டேங்குது பார்த்தீங்களா?
One small request to participants. There are many people have posted not to post any message, but still some people are giving answers. So it's disturbing others. So please restrict posting messages. I have disabled the chat just because of this reason.
அது வேறயா?
If I disable chat, you cannot communicate anything. So,
போக மாட்டேங்க.
sir, screen இருக்கே sir.
எது இருக்கு?
MCQ general matters.
இருக்கா?
I am able to see. What is the odd man out in Canara Aspire?
என்கிட்ட இல்லையே அது. எனக்கு வர மாட்டேங்கிறது. என்ன பண்ணலாம்?
ஷேர் ஸ்கிரீன்ல அதான் இருக்கு.
எனக்கு வர மாட்டேங்க. See, MCQ general.
MCQ general matters, important circulars.
வரலமா? I do not know, ma.
The share screen.
scan பாருங்களேன். See, I'm going to share screen. இதுதான் எனக்கு வேணும் இப்போ. MCQ general.
That is what it is being displayed.
It is not displaying for me.
உங்களுக்கு what is in your display?
இருங்க. இப்போ வந்துட்டு நினைக்கிறேன். எஸ். இது வந்து அது போயிடுது.
இப்போ இருக்கு. இருக்கு.
இருக்கா அனந்த கிருஷ்ணன்?
Yes, very much available. Important circulars.
Okay, very good. Okay. So, ladies and gentlemen, boys and girls, so there are 125 questions. So, it was prepared with a lot of efforts. So, we have seen around in 35 questions, which are all the important changes that has come in the credit related matters. With the PowerPoint presentation, we explained. With the answers today, I will upload in the site. Now, that is MCQ general matters. So, general matters, important circulars issued by the bank after your last exam till July 2025, covering the changes only. So, you know the Aspire, you know the Canara Crest, you know the Angel, everything you know. But there are certain changes that it has come after the last exam. Those changes connected and the circular also I will be presenting to you. If time permits, go through the circulars also. So from my point of view, I have thoroughly gone through the circular, and points I have downloaded from that circular. I have created that somewhere. Some PowerPoint presentation is also there, and these questions are also there. We will go through it. So what is the odd man out? In respect of Canara Aspire, as per HO Circular 687 by 2024, with modifications is 60 by 2025. All of us are aware the Canara Aspire has been introduced in HO Circular 687 by 2024. That is a base circular. In the products and the deposits, somebody would have explained to you. Now you recollect those points and see whether these points are also incorporated in the presentation. So the modification has come in 60 by 2025. So which is the odd man out, which is not correct? That is a question. To onboard young customers in the age group of 18 to 27 years, interest rate concession 0.50% available only for inland studies for customers maintaining quarterly average balance of 50,000 and above. Product code is 1631. 25 checklists free per annum. 5 free rupiah platinum millennium debit card with AMC waiver, which is an odd man out. 1 to 5 all are odd man out. That means 1 to 5 all are wrong. B, 1 is wrong. C, 1 and 2 are wrong. D, 4 and 5 are wrong. That is, they are odd man out. E, 1 to 5, none of them are wrong. Okay, so in HO Circular 687 by 2024, the age group is 18 to 28 years. If I am correct, it is 18 to 28 years. But in 60 by 2025, it is modified to 17 to 28 years. So 17 to 28 years, it is modified in HO Circular 60 by 2025. That means point number 1 is not correct. So point number 1 is 18 to 27 is mentioned. So 18 to 27 is neither in the old circular nor in the new circular. So in the new circular, the age group available for Canara Aspire is 17 to 28 years. So 1 is wrong. 1 is an odd man out. Point number 2. Point number 2, it is mentioned, interest rate concession 0.50 is available only for inland studies for maintaining average balance. So that was there in 687 by 2024. In 60 by 2025, this is told interest concession for the new loans available for 0.50 even for abroad studies. So point number 3 is correct in both the there is no modification. Point number 4, there is no modification. Product code is 1631 and 25 checks is free. That is also no modification. Free rupiah platinum medical card, no like a modification. So which is an odd man out? Odd man out is 1 and 2. Which varies 1 and 2? 1 and 2 is C. So your correct answer option for question number 1 should be C. So when the wrong answers are there, we should know the correct answer. To onboard young customers in the age group of 17 to 28 years in HO Circular 60 bar 2025. Internal interest rate concession 0.5% available for foreign studies also. So question number 1 and 2 are the odd man out. Question number 1 answer is A. So answer is C. Question number 1 answer is C. Question number 2. Which is correct with regard to availing one free certification course from the Korasa as per HO Circular 585 by 2025. So earlier, this facility is available for Canara Aspire account holders. In 585 by 2025, they told this facility is available for Canara Angel account holders also. Okay, that is for 585 by 2025. So that is for Canara Aspire customers, the free course is available if they maintain an average monthly balance of 2,000 instead of quarterly average balance of 5,000. This facility is also extended to Canara Angel and Canara Premium payroll customers maintaining average monthly balance of 2,000. Only one free course shall be available to the customers, and the courses will be available till 24/11/2025, and with the eligibility cutoff date 31/10/2025. None of these are correct. A to C all are correct. See, For Aspire customers, earlier it was 5,000 quarterly average balance. Now they reduced to average monthly balance of 2,000. A is correct. So instead of 5,000, now they newly introduced the Canara Angel and Canara Payroll Premium account holders also for this facility if they maintain the average monthly balance of 2,000. B is also correct. Only one free course, that is also correct. So A, B, C all are correct. So your answer should be E. A to C all are correct. Question number 2, answer is E. Question number 2, answer is E. Question number 3, which matches correctly? Question number 3, which matches correctly? Canara Angel account Lavender, product code 1630, Orchid 1628, Rose 1629, none of these. Which matches correctly? You know, for the that is Canara Lavender, the quarterly average balance should be 5,000 rupees, and we know for Canara Rose, the quarterly average balance should be 30,000, and we know Canara Angel, that is Canara Rose, and then Canara Orchid, the average quarterly balance should be 1 lakh. Again, I repeat, for Canara Lavender, the product code is 1628. Again, I repeat, Canara Lavender, the product code is 1628. The quarterly average balance is 5,000. For Canara Rose, that is the product code is 1629. The quarterly average balance is 30,000. For the last one is Canara Orchid. The product code is 1630, 1628, 1629, 1630. Starts from lavender, rose, and orchid. 1630, and the average quarterly balance is 1 lakh. Now you tell me which does not match. So what should be your answer? So Canara Angel account lavender, product code is 1630. So product code 1630, no. So Canara, that is Orchid 1628. Canara Orchid 1628. Canara Rose 1629. None of these. Which matches correctly? C only matches correctly. C is Canara Rose is 1629. That is correct because Canara Lavender, the product code is 1628. And Canara Orchid, the product code is 1630. Canara Rose is 1629. So in the three products, point number C is correct. Question number 3, answer is C, which matches correctly. Okay, sir. Then question number 4. Female employees and female ex-employees in the age group of 18 to 70 years are permitted to open Canara Angel as per HO Circular 701/2024. When the scheme was introduced, so the employees and ex-employees are not eligible, female, up to 18 to 70 years, no, for others also 18 to 70 years. They are not eligible for Angel account, but they have been permitted to open Canara Angel. What is additional interest payable for female staff members? You know, SB account. So when you open under 111 product code, either male employee or female employee or ex-employee, they are eligible for 1% additional interest. But with regard to Canara Angel, so can a lady is staff member or ex-staff member in the age group of 18 to 70, ex-staff members above 60, they can open. But no, that is given permission in 704/2024. But they are not eligible for any additional interest like product code 111. So answer is D, none of these. Question number 4 is, answer is none of these. So as you are aware, so the Angel original HO circular was 313/2024. 313/2024 Angel, and then modification is given in 704/2024. So no additional interest is permitted. Question number 4, answer is D. So we have been discussing not the products. Products already would have been told by various forums in Canara Nurture as well as in CBOA classes. Now we are discussing the important circulars, that is other than credit matters, issued from October 2024 to August 20 or July 2025. Question number 5. Canara Trust can be opened only by individuals in single name only. True or false? Yes. Canara Trust can be opened only by individuals in single name Answer is true. Individual accounts in single name only. HO circular 808 bar 2024. Note the circular number. Question number 5. It was introduced after your exam. 808 bar 2024. You can expect questions that base circular is 808 bar 2024. Canara Trust can be opened only by individuals in that single name. No joint account is permitted. Only true. Answer is true. Okay. Then, what is the product code of Canara Crest? The product code of Canara Crest is 1633. So please note it down. What is the product code of Canara Crest? 1633, 808 bar 24. Again, I repeat, 808 bar 2024 because the circular has come after your exam. So please go through the circular. 808 bar 2024. The product code is 1633. What is the criteria for classifying a customer as Canara Crest Plus? So Canara Crest, you have Canara Crest customer and Canara Crest Plus customer. So Canara Crest customer, if they maintain average annual balance or quarterly annual balance, okay, quarterly annual balance or average and quarterly average balance or annual average balance less than 50 lakhs, less than 50 lakhs, Crest customer. Crest Plus means more than 50 lakhs. Average annual balance slash quarterly, that is average balance, if they maintain. So less than 50 lakhs, they are called Crest customer. More than 50 lakhs, they are called Crest Plus customer. The answer should be average annual balance slash quarterly average balance more than 50 lakhs. They are called Crest Plus customer. Okay, question number 8. Question number 8. The initial deposit of rupees 10 lakhs has to be brought within dash after opening the Crest account. So, that is earlier in HO circular 808 bar 2024, after opening the Crest account, so they have to bring the initial deposit of 10 lakhs within 7 working days. HO circular 808 bar 2024. The initial at the time of opening zero balance, then they can bring the 10 lakhs initial deposit within 7 working days. But in HO circular 142 bar 2025, in HO, this is the question number 8 is, in HO circular 142 bar 2025, they told the initial deposit of 10 lakhs to be brought within 7 calendar days. So 808 bar 2024, 7 working days. My question is, after opening the current, the recent circular, they should have mentioned, if they have mentioned the circular, if they have mentioned the circular, so 1 minute, sir. If they have mentioned the circular number 142 by 2025, if they have mentioned the circular 142 about 2025, it is 7 calendar days. If the circular number 808 for 2024, if the circular number 808 by 2024, it is 7 working days. Okay, 2 answers I am giving. 808 by 2024, 7 working days. 142 by 2025, it is 7 calendar days. Okay. The pre-approved credit card limit for Crest and Crest Plus customers as per HO circular 142 by 2025 is how much? Answer 2.50 lakhs and 5, that is 2.50 lakhs and 5 lakhs, rupees 2 lakhs and 3 lakhs, C rupees 2 lakhs and 4 lakhs, none of these. So that is earlier in 808 bar, that is 2024, when the scheme was introduced, the pre-approved credit card limit both for Crest and Crest Plus customers was 1 lakh. Now in 142 bar 2025, for Crest customers, it is 2.50 and Crest Plus, it is 5 lakhs. So for question number 9, answer is A. Original 808, it is only 1 lakhs for both the customers. In 142 by 2025, it is made as 2.50 lakhs and 50 lakhs, the pre-approved credit card limit. So question number 9, answer is A. Question number 10. Which is not correct with regard to contributory pension scheme exclusively for minor who are Indian citizens, introduced in HO circular 699 by 2024. Name of the scheme is NPS Vatsalya scheme, and it is a pension account of the minor opened and contributed by guardian till the minor attains 18 years of age. Point number 2. The minimum contribution is 1,000 per annum with no upper limit, and initial contribution for enrollment is 500 rupees. For the purpose of education of the subscriber, treatment of the specified illness of the subscriber, or disability of more than 75% of the subscriber, guardian shall be allowed to partially withdraw up to 25% of the subscriber's contribution, excluding returns thereon, after a minimum 3 years from the date of opening the account, for maximum 3 times till the subscriber attains 18 years of age. Then, in the case of death of the minor subscriber, the entire accumulated pension wealth to be paid to the legal heirs of the minor. 5. The subscriber shall be allowed to exit only upon attainment age of 18 years. On such exit, at least 80% of the accumulated pension wealth available in the account shall be utilized for the purchase of annuity, and the remaining balance shall be paid in lump sum. So these are all the points I have picked up in the circular 699/2024. Basing one point also, questions will come. So you should be thorough with all the points what I have given here. So which is not correct. So point number 2 is not in the circular. What is the point number 2 here? The minimum contribution is 1,000 rupees. The minimum contribution rupees 1,000 per annum with no upper limit, and the initial contribution of our enrollment is 500. It is mentioned here. Here in the question paper, in the circular. Sorry. In the circular, so it is mentioned, so the initial contribution of enrollment should be 1,000 rupees. So that is the minimum contribution rupees 1,000 per annum, and the initial contribution is also 1,000 rupees. Here I mentioned 500, so which is not correct. Point number 2 is not correct. Point number 3, whether it is in the circular. For the purpose of education of the subscriber, etc., etc. So disability more than 75%, the guardian shall be allowed to partially withdraw up to 25% of the subscriber's contribution. That is correct. Point number 4. In the case of death of the minor subscriber, the entire accumulated pension wealth to be paid to the legal heirs of the minor. No, that is not there in the circular. To be paid to the guardian of the minor. So question number 2, point number 2 is not correct. Point number 4 is not correct. So point number 2 is not correct means what is the correct answer? 1,000 per annum with enrollment of rupees 1,000. Point number 4 is not correct. In the case of death of the minor, it will be paid to the guardians of the minor. Okay, point number 4 is not correct. So 2 is not correct, 4 is not correct, 5 is correct. No problem. So what is the which is not correct is asked. Your option should be 2 and 4 are not correct. So for question number 10, your answer should be D. So this is I have collected from the Vatsalya scheme for minor. Please go to the HO circular 699/2024. If you get some more points, use it for your information. At least the circulars which I have quoted here, no, if you are thorough, you can answer that is questions. Most of the questions you can answer from here. As Mr. Ravi Kumar told, if the examiner takes some other points from the circular, you should not miss out. So even though 700, 800 circulars have come till my last exam, I have restricted to maximum 125 circulars or 100 circulars. That is other than credit. Go through the circular. So for question number 10, your answer should be D. Question number 11. Under action point 01 of E7 agenda, all PSBs, public sector banks, have been advised to introduce digital banking solution suite for MSME customers. Now we are now having EAS 8.0 agenda. So this is EAS 7.0 agenda. That PowerPoint presentation I will show in the next class. There is some technical issue we are getting when I switch over to the PowerPoint. So under action point 01 of E70 agenda, all public sector banks have been advised to introduce digital banking solution suite for MSME customers to offer various online services to its MSME customers through internet banking on corporate website like stock statement submission, update GST, URC number, etc. As per HO Circular 840/2024, our bank has introduced this facility for the corporates to upload all those things. So this is digital banking solution suite for MSME customers. What is the name of the portal? So please note down the name of the portal is MSME Digi Portal. The name of the portal is MSME Digi, DIGI. MSME Digi Portal is the name of the portal. HO Circular. So 840/2024. Question number 12. What I denotes in rise in respect to EASE 80? So one of the theme of the EASE 80 is rise. Okay, RISE. So I denotes their innovation. I denotes their innovation. So the PowerPoint will discuss, other points we'll see in next class. So here, note down the answer for question number 12. I denotes innovation. Question number 13. Customers Day to be observed between the detailed circular, HO circular 712/2024 has been issued after the exam. Customer Services Consolidated Guideline issued by RBI and issued by Banking Ombudsman or issued by all the details from Canara Bank. A consolidated circular has come. So you know the customer is the main thing everywhere. So questions may come from the consolidated circular. Probable questions I have made. PowerPoint also I have made. We'll discuss the PowerPoint in the next class. Now, Customers Day to be observed, that is the 15th of every month between 3 to 5 p.m. If 15th is a holiday, it has to be conducted. Next working day, previous working day, 16th of the month, 14th of the month, Customers Day dispensed with as per HO circular. Customers Day to be observed on 15th of the every month between 3 to 5 p.m. If it is a holiday, it has to be observed on the next working day. So question number 13, answer is A. Next working day. Expand BLCSC. So expansion is branch level customer service committee. So BLCSC is branch level customer service committee. Branch level customer service committee. What is the periodicity of the meeting of BLCSC? It is monthly along with the customers day. So it has to be conducted monthly along with the customers day. So correct option, available option among the option given here, your answer should be so branch level customer service committee. Please refer HO circular 712/2024 if you have a doubt. Block level customer service, somebody is typing. Please go through HO circular 712/2024. Branch level customer service committee meeting. It has to be conducted once in a month and along with your customers meeting on 15th of the month. For question number 15, answer is A. Question number 16. What is our bank's one bank, one toll free number? 1800, that is what is our bank's one bank, one toll free number? All of you are aware. It is 8-digit number 18001030. 18, our WhatsApp number and all has been merged. We have now only one number. So one bank, one number, toll free number is 18001030. So customers fortnight is to be observed from, that is in the fortnight we are having. Similarly, customers fortnight. Customers fortnight to be observed from 16th November to 30th November of every year. Note down the dates. 16th November to 30th November of every year. Which is the odd man out in respect of portals for lodging customer complaint? With 20 questions, we will okay, we are some time, 10 minutes. Whatever possible questions, we'll hurry up. So, which is the odd man out in respect of portals for lodging customer complaints? Canara Public Grievances Redressal System, CPGRS. I told you, that is customers with regard to credit information report, CIR, they have to lodge through CPGRS. We have seen, one point. Okay. Centralized Public Grievances Redressal and Monitoring System, Complaint Management System, CMS portal, Integrated Grievances Redressal Mechanism, Integrated Grievances Redressal Mechanism. You see here, so A is Canara Public Grievances Redressal System. This is internal. It is an internal portal. For complaints within Canara Bank, this is an internal portal available to customers. Centralized Public Grievances and Monitoring System, it is an external portal. It is not within Canara Bank. So, which is the odd man out? The question is, which is the odd man out? So, which is the odd man out? So, CPGRS is the internal, CPGRAM is external. So, Complaint Management System, CMS portal. What is the CMS portal, sir? Through CMS portal, what type of complaints to be lodged and where it will go? Any idea? The CMS portal is the portal introduced by the Banking Ombudsman. So it is also an external portal. Complaints to be lodged through the CMS portal for ombudsman complaints. It is an external portal. So that is a complaint management system. Once they ask the question, customer complaints through banking ombudsman to be lodged under which portal? CMS portal. Complaint management system of banking ombudsman. Okay. Then integrated grievances redressal mechanism. This is the portal introduced by Department of that is your finance ministry, DFS. So that is integrated grievances redressal mechanism. So these are all the things. B, C, and D are the external portal. So whereas A is the internal portal for compliance redressal, so which is the odd man out in respect of portals lodging customer complaints, your answer should be answer A. Answer is Canara Public Grievances System. It is an internal portal. Remaining three are external authorities portal where the customers can lodge the complaint. Then the complaint will be forwarded to the bank. Here, Canara Public Grievances. Straight away the complaint will to the bank. So question number 18, answer is A. So question number 19, with effect from 23/8/2024, complaints in CPGRAM. What is CPGRAMS? Integrated Grievances Redressal Mechanism, which comes from the Finance Ministry. So I have given the short form, I have given the expansion also. Clerical to officer, people who are going attending the class, note down the short form, note down the expansion also. If you write the expansion only once, you will get it correctly. Otherwise, in the exam, you will find out all seems to be similar. Okay. So with effect from 23/8/2024, compliance in CPGRAMS, that is Integrated Grievances Redressal Mechanism, to be addressed within how many days? It should be addressed within 21 days. Earlier, it was more number of days were there. Now it is reduced to 21 days. Any complaint lodged in that is integrated grievances redressal mechanism, the same day it will flow to the bank. So within 21 days, it has to be addressed. So any appeal given into that portal, to any appeal, customer is not satisfied with the reply, any appeal given in the portal, that has to be resolved within 30 days. All these answers note down. Any of these answers I will upload after the class is over. So maybe next week. So integrated grievances redressal mechanism, complaints in CPGRMS to be redressed within 21 days. Any appeal comes there, you should be redressed within 30 days. Okay. Sorry, sir. Okay. Then question number 20. Which is correct? So with this question, we'll stop, sir. Which is correct with regard to banking ombudsman? For the details asked by the banking ombudsman, if suppose customer is lodging a complaint with the banking ombudsman, detailed PowerPoint that we'll see in the next class, sir. For the details asked for by the banking ombudsman, bank has to reply. If customer is lodging a complaint with the banking ombudsman, banking ombudsman is sending the complaint to the bank, is asking for a reply. Within how many days bank has to give the reply to the banking ombudsman? If it does not give the reply, what will happen? That is the point number A, which is correct. Point number A. For the details asked for by the banking ombudsman, bank has to reply within 15 days. Otherwise, bank will lose the right to appeal against the order of the banking ombudsman. Yes, correct. So who is the appellant authority in the banking ombudsman? So far, it was Deputy Governor of RBI. A change has come. The appellant authority in the banking ombudsman is the executive director overseeing banking ombudsman in RBI. So who is the appellant authority? The executive director overseeing the banking ombudsman is the appellant authority as far as the banking ombudsman cases are concerned. It is not Deputy Governor of RBI. Okay, for details asked for by the banking ombudsman, bank has to give the reply within 15 days. Otherwise, any decision given by the banking ombudsman, bank cannot appeal against the order of the banking ombudsman. Point number A is correct. Point number 2. B. Bank has to settle the award within 30 days of the award or go in for the appeal. Point number C. Customer to lodge the complaint either through the portal, email, registered post or through his advocate. Point number D. The appellant authority is Deputy Governor of RBI. Point number E. The maximum award will be rupees 20 lakhs besides rupees 1 lakh. 1 lakh. It should be 1 lakh, sir. Please note it down. 1 lakh for mental agony, cost, etc., which is inclusive of the amount in dispute. What is the question? Which is correct? So point number A is correct. So within 15 days, bank has to give the reply. Otherwise, bank will lose the right to appeal against the order of the banking ombudsman. What is point number B? So bank has to settle the award within 30 days of the award or go in for appeal. No, that is not correct. What is the correct? So when bank has to settle the award or go in for appeal, when the banking ombudsman issues the order, it comes to the customer and it goes to the bank. Bank need not immediately act upon the order. Bank has to wait what the customer says. So the customer has to accept the award and inform the bank, or the customer has to go for an appeal. So customer, when the order comes to the bank and the customer has to go for appeal against the order, or the customer can accept the award and intimate the bank. These two things he has to do within 30 days of the receipt of the award. So if when bank has to react, bank has to react only after it receives the letter of acceptance from the customer. So customer says, yes, I am accepting the order, give me the money. So bank has to, that is, either pay the award amount or go for appeal, not within 30 days from the order. It has to go for the appeal or it has to pay the award within 30 days from the date of acceptance letter received from the customer. So point number B is not correct. Point number C, customer to lodge the complaint either through the portal, CMS portal, or by email, registered post, or through his advocate. No, there is no advocate has to be appointed in the case of handling the that is banking ombudsman cases. So point number C is not correct. Point number D, the appellant authority is Deputy Governor of RBI. I told you it has changed. It is the I told you it is changed. It is executive director overseeing the banking ombudsman function in RBI. So point number D is also not correct. Point number E, the maximum award will be 20 lakhs, besides rupees 1 lakh for mental agony, cost, etc., which is exclusive of the amount in dispute. It is exclusive of the amount in dispute, not inclusive of the amount in dispute. So it is exclusive of, suppose there is a dispute for 10 lakhs. So our banking ombudsman will give an order to the bank because of the 20 lakhs per 10 lakhs. This is exclusive of the amount in dispute, which is another 10 lakhs. So here point number 1 is only correct. So the other points are not correct. For the points which are not correct, I told you the correct answer also. So with this, we are winding up the session for today and we'll meet in the next class. Mr. Ananda Krishna? Hello.
Yes, sir.
Okay. Namushta.
Okay, sir. You know how many questions, sir?
Huh?
You know how many questions are there?
You know, 20 questions முடிச்சிருக்கேன் 100 question இருக்கு.
Oh. And
அது இன்னைக்கு நான் கொஸ்டின் பேப்பர் போஸ்ட் பண்ணிடுறேன் உங்க குரூப்ல.
Okay, sir.
நீங்க அப்லோட் பண்ணுங்க. அந்த பவர் பாயிண்ட் ஒன்று பண்ணிருக்கேன், அதையும் போஸ்ட் பண்ணிடுறேன்.
Okay, sir.
Okay.
Okay, sir. Thank you, sir. Thank you on all our behalf. Screen you are able to see, sir?
Screen I am able to see.
They are giving feedback.
Oh, they are giving feedback. So all these, for the previous question paper, I will give the answer.
Yes,
I'll upload, you can upload with answer. Then this question paper without answer as well as the PowerPoint presentation I will give. Can upload. Tomorrow we will finish this.
Okay, sir.
Then next class I will take the recovery policy, loan recovery policy.
Sir, 108, 116 and 117 slides.
Huh?
in your PowerPoint slide,
ஆ
108, 116, 117.
ஆ
அதில் ஏதோ சேஞ்சஸ் இருக்குன்னு there is a message.
என்ன 106 எது கொஸ்டின் பேப்பர் ஜெனரல்
108
கொஸ்டின்
slide PowerPoint slide.
எந்த ஸ்லைடு இதுவா
இன்னைக்கு காமிச்சது 108.
இன்னைக்கு காமிச்சது இது இல்ல இன்னைக்கு நான் ஸ்லைடு காமிச்சது கிரெடிட் மேட்டர்ஸ்
ம்
அதுல 108 கொஸ்டின்ஸே இல்லையே 35 கொஸ்டின்ஸ் தானே இருந்தது 33 கொஸ்டின்ஸ் தானே இருந்தது
இல்லை ஸ்லைட் நம்பர் ஏதாவது இருக்கா?
108 இருக்கு
108, 116 and 117ல
1 minute I will note it down. No, what is the thing they ask them let them also tell what is the change 108 I have given circular number 578 bar 2025 my 108 slide is circular 578
Madam Divya, are you in the class now?
hello
Divya, if you are in the class, you drop a message.
sir what is given in the slide 108 slide number I have given the circular number also are you able to see the presentation sir
No, it is still PDF தான் இருக்கு.
it is file in the PDF file only 1 minute
Divya, are you in the class?
are you able to see now
Yeah,
No.
sir.
huh
Yes, sir.
108
Yeah, 108.
578 by 2025 this is the circular
But she's telling it is 587 new circular.
okay circular number is wrong I thought my subject is wrong 587 huh?
Let me check up with her.
okay if the circular number is wrong I will correct then anything next one
116, sir.
116
Hello.
I will go to 116 pre-release audit two circulars 896 and 158
Sir, question circular number is correct only 578. 578 what is?
what is wrong in that 108
Okay, sir. Earlier material which was shared, no, same PPT. It was not there in the.
that is why the PPTs I should share after the class is over
Okay.
that is why generally I won't share before the class is over because sometimes some in between some change. See, for example, previous if you see only up to this 23 by 25 only was available.
Correct.
So now I have made 578 by 25 after going through the circular before this class.
Okay.
So in that case, that 108 there is a 578 circular I have put. Because in that circular I would have told above 1 lakh it has to be uploaded. Now it is irrespective of the loan amount, it has to be uploaded.
Okay.
Then what is others? Anything else?
116 and 117, sir.
What it is told 160.
Yeah, you added new slides, sir. That was not in earlier.
Super. Because 158 circular I added here.
Okay.
Then.
Okay, madam, clarified. Okay, sir.
Okay.
Okay.
Okay, I will upload. I will give this presentation. This you upload now.
Yeah, sure, sir. Mr. Ravi
Okay,
Gupta, I already shared the link for WhatsApp group. You can join. I will immediately approve. Okay, sir.
Okay, close பண்ணிடுமா?
Yes, sir. Thank you, sir. I am approving all the requests received in group 6. You want that group link again? I'll share. Group link is shared once again. Whoever wants to join, please join using this link. And Mr. Chandrasekhar Reddy sir class has been posted in groups. You can use those link and the video. You can use the video.